welcome you all to the session on Evolving Standards and Audit Profession and Open Dialogue with NFRA. This is probably the first of the event by KSCAA to have an open dialogue with NFRA. And the cherry on the top is we are having the chairman of NFRA who is going to address us and clarify doubts and have an open dialogue as well. May I now request CA Vijay Kumar Patel, President of Karnataka State Chartered Accountant Association, to accompany our today's chief guest, Dr. Ajay Bhushan Pandey, Chairperson NFRA, onto the dais. Dr. Ajay Bhushan Pandey is currently the Chairperson of National Financial Reporting Authority since April 2022. Over the last decade, Dr. Pandey has been at the helm of several historic and groundbreaking India's reforms in finance, corporate governance, Aadhaar, digital payments, GST, and direct tax. His past roles include Finance Secretary and Revenue Secretary of India, CEO of UIAD, and Chairman of Goods and Service Tax Network. Dr. Pandey was conferred the Economic Times Award for Policy Change Agent in 2019 for his contribution to Aadhaar and India's digital growth. Dr. Pandey holds a postgraduate and doctorate in PhD in computer science. He has completed his BTech degree from Indian Institute of Technology, Kanpur. With this, I once again welcome Dr. Ajay Bhushan Pandey. Request President to welcome with a floral bouquet. Welcome him with a book. Request President of KSCAA to deliver his welcome address.
Good morning, everyone. The voice seems to be loud, otherwise normally people don't respond. A very warm welcome to Dr. Ajay Bhushan Pandey, Chairman of National Financial Reporting Authority, and his colleagues over here, and also our beloved members to this gathering, Open Dialogue with NFRA. So, KSA was formed in the year 1957 and it is in its 78th year of existence. To its history, the association has seen profession getting formed, maturing, opportunities being coming, opportunities being removed and whatnot. Currently, the association has 4,000 plus members and we cater to more than 17,000 members of ICI in their journey. We are the second largest voluntary organization in India. And today, our members are not only restricted to Karnataka as our name suggests, but we are spread across India. The association is the mouthpiece of chartered accountants. Our consistent efforts to engage with various stakeholders and regulators have yielded positive results for the members. We have been actively involved in giving representation and yielded positive results to the government and regulators constantly. The happy factor would be to note that many of our representations have been even attended by the government and changes wherever required have been brought into the law or rules wherever required. Going by the trend, we also try to ease the representation by capsulating it into a tweet format. We actively engage with stakeholders, not only in bringing the pain points, but positively bringing the suggestions on what would be the right approach. A recent example has been a committee in which KSCA, along with the Cooperative Society Audit Department, jointly took an exercise to revisit the reporting format, bringing transparency and accountability, etc. I remember the KSCA annual conference for the year 2022, we had a panel discussion, Watching the Watchdog. The discussion revolved around the concept of working around of how to regulate the means and fixing the stakeholder confidence in the process. The phrase, auditor is a watchdog, not a bloodhound, was famously quoted by Lord Justice Lopes in 1896 case of Kingston Cotton Mill Company, a classic case to describe the role and responsibilities of an auditor. This statement then emphasized that auditor's job is carefully to oversee the financial reporting, but not to actively search for fraud or misconduct unless there are clear signs of irregularities. If there was an option for me to press the refresh button and see its meaning, I'm sure the world would give a different meaning today. The modern world and public expectations are far beyond, and the concept of being just being a watchdog. Just being watchdog is unintelligent. Auditors today are expected to apply professional skepticism, assess the fraud risks, and use advanced tools, but still, they are not investigating officers. Their primary role remains to express an opinion on whether the financial statements are free of any material misstatement. However, if red flags appear, auditors are now expected to act with more diligence in uncovering the potential fraud. Looking at responsibility cast over public expectation, we feel burdened to fulfill this expectation. However, I do not want to conclude everything rosy. Today, I want to talk on three important biases. Hasty generalization. Observing a few corporate scandals and then concluding that all auditors are negligent is hasty generalization, because it uses a small sample, the scandals, to judge the entire profession. Law of large numbers. If we evaluate the performance of auditors across a large number of audits, we will find that vast majority are done correctly and ethically. The cases where audits fail are statistical exceptions, not the rule. Therefore, making a broad generalization based on just these few exceptions is not supported by law of large numbers. Media amplification and availability heuristic. The media disproportionately covers the failures, making them more memorable and leading people to believe they happen often than they actually do. This is cognitive bias, not a reflection of the reality. The generalization is hasty because it's based on the distorted view shaped by media coverage rather than the actual frequency of these failures in the broader auditing landscape. The fast-paced world and media today puts the auditors in a spot of scandal as someone who is beneficiary of this scandal, whereas he is actually part of the whole economic chain. Such hasty generalization and stretching beyond what is needed could have been avoided. I have a small statistic that I thought would share over here, which is very interesting. According to ICI, full-time COP holders, 54,431 ACAs versus 90,627 FCAs are full-time COP holders. If FCA is more than 5 years and ACAs is less than 5 years, then we have more experienced CAs in the profession than the less experienced. This is inverse to our demography. Either practice profession is not lucrative to attract the young talent, or youngsters feel this too much burdensome to carry. The workforce is higher always at the bottom of the pyramid, but we can see an inverse over here in this understanding. This brings to my next point on the remuneration. There is constant pressure on the profession to reduce fees, and market forces just too complex to say no to an engagement. We need broader consensus on this in a larger forum. Sitting in the Silicon Valley of India, I feel that we can bring a lot more opportunity as well as efficiency. Technology can play a role in helping auditors become more efficient by helping in data analysis using the tools like AI, OCR, cloud computing, etc. For some of us, these are still in the textbooks and are very soon to become relevant in the times to come. Also, in the world of AI, the role of auditor of data is more crucial because of the sheer volume of data which we'll be auditing. NFRA was established under the Companies Act 2013 with the core objective of improving the audit quality and reliability of financial reporting, particularly for large public interest entities. NFRA's mandate is crucial in today's environment where transparency and accountability are non-negotiable. It monitors and enforces the compliance with accounting and auditing standards, ensures that financial reports meet the highest level of integrity. More than just an oversight body, NFRA conducts quality reviews of audits for listed companies, large unlisted companies, those impacting the public interest. This is essential to prevent the kind of lapses that undermine our profession. At the outset, let me thank the regulator to come all the way and extending an opportunity for an open dialogue. Sir, I believe soft diplomacy with no action points is particularly of no use. For the next 3 hours, let us have an honest discussion with no worry judgment. Let us work on things which we can do together, positively try to build. With this, I believe that credibility of profession would be better cemented. Our members are eager over here to listen to the discussion. I conclude my speech with a positive hope that such programs would continue to happen held in future days, also bring a better change in the profession. Once again, I welcome Dr. Ajay Bhushan Pandey and his team from NFRA and all the members taking part in this discussion. Thank you.
Thank you, President, for this welcome address. May I now request Dr. Ajay Bhushan Pandey, Chairperson NFRA, to give his keynote address to the audience.
Yeah. Good morning. First of all, it is my privilege to be here amongst you this morning. And I'm thankful to Karnataka State Chartered Accountants Association, Mr. Vijay Kumar Patel and all the office bearers to invite me for this interaction. If there is anyone in this room who is the least knowledgeable, I must say, in terms of number of years, it will be me, right? So therefore, but that also gives, I think, me an advantage that I have no baggage. And I look at things very, very differently. And my perspective will be very, very different, right? Because sometimes what happens is that if we are into the game for a large number of years, then you mentioned about the cognitive bias, right? So in some sense, that bias also comes in. So at least in my case, because I have no baggage to carry, and also after a few years, I have nothing, maybe I will have nothing much to do with, particular, some of the things that we do now. So in that sense, my views will be, I would say that is likely to be, I can't say that, it will be always be free from bias, because every human being by nature is a biased, the being. But then the chances and then the probability in terms of that. The another thing, and which again I have learned during my tenure here from the profession, that, give disclaimer. And I must give a disclaimer here, number one, that, whatever views that I express, that is my own personal views, not of NFRA, right? National Financial Reporting Authority. And that is a good, that's a good thing. It's not that I'm trying to, avoid discussion. But then if you want to have a free and fair discussion, then I must say that because, today, supposing if I say something, right? And then, my views may change after, maybe, when certain proceedings are conducted, some new facts are brought before me, then, it will require me to change my views, number one. And then, there are other two colleagues in NFRA, they also may have a different views. So therefore, for this discussion, as I said, and I have learned from you, that, the disclaimer, right? Now, in fact, I am very happy that, even though I was looking into the background of Karnataka State Chartered Accountant Association, and you mentioned a very, very important point. Even though the name may suggest it's a Karnataka state, actually it has more than 3,000 members, 4,000 members, and spread all over the country. And the very fact that, the Karnataka State Chartered Accountant Association came forward to have this conference, the interaction, that shows that, you are willing to engage and willing to learn and willing to understand things from the various perspectives. So this is, again, a very, very important thing. The ICI was instituted in 1949, you all know, and then, in 1957, this KSCA, and since then, what the roles the chartered accountants have been performing over the last several decades, absolutely I must say that whatever progress that we achieve as a nation, the chartered accountants have a great role to play, and they had played a very, very important role. I mean, there is absolutely no denying the fact. Also, I fully agree with you that a few instances of certain wrongdoings does not reflect on the capability or the contribution of the organization as contribution of the profession as a whole. Because in any profession or any group or in any society, you will always have some outliers. And therefore, if any outliers are being pointed out or some corrective actions are being taken, that should not be seen as an indictment of the entire profession. So I will fully agree with you. Now, before I mention about the accounting and auditing part of this, let me give you a little bit of context. And I have said this before in my, in my previous discussion elsewhere, that, our country is today at a very, very critical stage of the development cycle. Many times, it so happens that, when you are undergoing that change, you don't realize that. Because, you are always part of the change. But, I'm just going to, recap, what has happened not necessarily over the last, 30, 40, 50 years. Just, I will present you some of the things that as a country we have done during the last maybe 10 years or so. And, in fact, I was privileged to be part of many of the things. And just see that how it has impacted everyone, including the profession of chartered accountants. We have become a fifth largest economy, right? And then till a few years back, we were 13th largest economy, then we became 9th largest economy. And in about 10 years, we have, secured this position of fifth largest economy. Now, we will become third largest economy. It is just a question of some time, because the fourth and third current incumbents, they are just marginally above, in terms of GDP numbers. So soon we are going to become a third largest economy. Now, there are also many estimates as to what will be shape of India in 2047 when India turns 100 years. There are various estimates. The Ernst & Young estimated that the India's GDP will be about $27 trillion. Now, this $27 trillion, I'll give you some perspective. Today, the U.S., United States of America's GDP is about $27 trillion. So, in 2047, we are expected to become the economy of the size of United States. China today, which is the second largest, is $17 trillion. So our economy size in 2047 will be more than China today and almost same as the US. But there is also very interesting discussion which I came across. Our former chief economic advisor, Krishnamurthy Subramaniam, when I was finance secretary in North Block, he was chief economic advisor, and currently he is executive director in the IMF. He wrote a book, India at 100. And you know what he has estimated? That what will be our GDP? He says that our GDP in 2047, when India turns 100, will be $55 trillion US. much more than what Ernst & Young has estimated. And, he has just not, he is an economist. And, and he has, and before becoming CEA, he had done his PhD in, from the University of Chicago. And his PhD advisor, coincidentally, was Dr. Raghuram Rajan. And he was professor in the Indian School of Business, Hyderabad. And then he became chief economic advisor. Now he's in the IMF. So he has given his own analysis, own calculation as to what will be the India's GDP in 2047. That is about $55 trillion. Double, almost double than what Ernst & Young has done. But of course, he has given certain conditions. That, these are some of the things, if India is able to do right, we should be able to do that. And what is that? I mean, this is something we must understand that. Now look at, and if, so far as I am concerned, I am more aligned to what he is saying. And why I am saying this? That, India's GDP will be of that level. Because I have experience of actual working and where I was involved during the last 10 years. 10 years back, you all, in 2000, we are in 2024. And I was in UIDI since 2009, and then I continued there till 2019. So in the initial years, most people in India did not have a credible identity. You had some, maybe some privileged persons like us, we had a driver license, but then, your maid servant didn't have, the mass of population didn't have any ID, right? Now, without ID, how do you provide the services? How does he open bank account? How does he participate in the economic progress of our country? How does he get financially included? And so all those questions arise. And we solved the problem. We gave identity, digital identity to 1.4 billion people in about 6 to 7 years' time. I mean, imagine, it's unprecedented in the entire world. And it is just not an identity that we keep in your pocket. You can online authenticate yourself anytime, anywhere. And I always say that it is more powerful than, the digital signature. You all are CAs here, and you all are aware that, there is a digital signature, right? For that, every year you have to pay about 1,500 rupees, something like that. And if you lose, then another money. But here, what Aadhaar has done, Aadhaar has given you a digital identity for the lifetime, free of cost, right? How do you sign your income tax return? Aadhaar OTP, right? How do you open your demat account? How do you open, the various, the other bank account and other transactions? How do you do the UPI transactions? Underlying is the Aadhaar, right? So Aadhaar became the foundation of this. And this kind of a fate, I think, this is something which is the beginning of digital India, and this is what we have done. Why I am saying this in this conference is saying that, look, as a country we have been able to do that. And then, what did we do? We opened bank account for everyone. Then we provided online access. Then, we built another layer called UPI. And today, if you see the UPI transactions today, in 1 month, you have a 20 lakh crore rupees transacted through the UPI, right? I mean, the people have forgotten to go to the UPM. People are, people don't carry any card or something in the wallet. You just, you need, what you have to be careful is that you should have a mobile phone and it should be fully charged, right? I mean, this is the only thing that you would worry. I mean, is there any parallel elsewhere in the world, right? I mean, this is something, who has done this? It's the people of India, people like you, people, everyone who has contributed to this. So this is the power of India that we have done. Now coming to another very interesting statistics. Can you imagine that, the demat account today, there was a news item yesterday, the active demat account is 17 crores. Can you imagine what was the number of demat accounts in 2016? 3 crores. 2019, about 5 crores. Mutual fund portfolios, same 3 crores, but today it is around 15 crores. Now, when I talk about 15 crore and 16 crore, just see the number. Our total population is 140 crores. Now, divide by 4 will be approximate number of families. So about maybe, 30, 35 crores families. Out of that, if you have a 17 crore demat accounts, I mean, most likely in one family, in some family you may be having multiple demat accounts, but usually one demat account, right, on an average. To imagine, 17 crore demat accounts in a household of around 30 crores. Is this, what better example of that could be in the financial inclusion, right? Same thing about the mutual fund portfolios. But how has this happened? If the Aadhaar wasn't there, if eKYC wasn't there, if the Aadhaar sign wasn't there, do you think that, you could have 17 crore people who could have gone in from the, the broker to broker, sub-broker, and opened the demat account? Impossible. Similarly, just see the trend of SIP. SIP, Systematic Investment Plan, somewhere around 2016-17, it used to be 3,000 crore every month. And do you know the last month how much did we clock? 24,000 crores, right? And that is the reason, because I remember that when I was in North Block, I was a revenue secretary in 2019, and we did something in the budget. And then, the FPIs were unhappy. They started withdrawing the money, the market came down by 1,000 points. So they used to control Indian stock market, right? But today, for the last, in this year, in this financial year, they have withdrawn more than 90,000 crores, but still, the market is sustaining, right? Why? Because 24,000 crore is coming every month, right? So this is what our country has become. And then when the people talk about the financial inclusion, it is actually not we have gone much past financial inclusion. We have leapfrogged, because in 10 years, if you can do so much, it can't be said as a normal development. It is nothing but the leapfrogging, right? From no identity, we went to a completely digital online identity. From no payment system, we have now UPI, which is unparalleled in the world. We have, just look at the income tax. Where in that exercise I was involved. Now, I still remember about 10, 15 years back when I used to file my income tax return. And, I used to make sure that, only I prepare my return. I mean, a lot of people say that, take the help of professional. I say that, unless and until I understand this, how will I, and it so happened that, whatever efforts that I put in my, trying to, and whatever pains that I underwent while filing my income tax return, after 10 years or so, when I became Revenue Secretary in Government of India, I thought, I knew about the pains, and therefore, I said, let us make those changes. And one of the pains was that supposing if I have few bank accounts, how much interest I got, so contact each branch manager. If I have some dividends, how do I keep track of how much dividend I got? All it used to come in the paper slip, and then you will forget. Similarly, you may forget to include some of your bank account, for example, or some of the, and particularly if you have to calculate the capital gain, if you have done some transaction. So which is the short term, which is the long term, which is the equity, which is the non-equity. It was a nightmare for anyone to calculate this. And I'm pretty sure as a chartered accountant, you must have faced this, right? I mean, in the sense that, in order to prepare one income tax return, how much effort that you need. And then what did we do? We said that, all right, all financial institutions will report to income tax department that how much, interest they have paid, or how much dividend has been paid, how much, the mutual fund transactions have been done. And then, your annual information statement knows more than what you know. Many times, the people say that, look, I had forgotten that, whether, this transaction was there. And then this all, the annual information statement gives you the entire statement, and then you are able to, many cases, the income tax returns gets pre-filled, and this is what it happens. So this is the kind of a change, and of this scale. See, in India, we have the advantage. We can't do a small pilot and can be very happy. What we do is applicable not only for the current income tax filer who are 7 crore, but we have total 50 crore PAN numbers. Tomorrow, if our economy further improves, and if everyone has to file, this will be available to everyone. I mean, it's a completely democratic, right? This information is available. Similarly, the faceless assessment. I mean, you can file your taxes anywhere, and then entirely somebody it gets assigned to the cloud. I mean, who is your assessing officer? Is the cloud officer, right? And then, he gets to assess you. So we have tried to bring in certain objectivities. Again, of this level, this scale. The GST was also another example. The 27 states, 8 union territories, all having their own tax, and then, all kinds of complications. We all have seen. And who will know better than the chartered accountants, right? Now imagine, again as a country, all the states came together, and then we said that, let us, and this has not happened anywhere in the world. Because, the GST is there in different parts of the world. But merging GST with, the central government taxes, like, excise and other service tax, and then, having one uniform tax. Of course, different tax rates on different items, but at least there is one system of taxation, so that was something was brought in. So many of these things have been done during the last 10 years, and then, you see the result today. As I mentioned about the SIP, then, the portfolios and the demat account. If you see the tax collection, I'll give you an example. 2019, when I was Revenue Secretary, that time our income tax collection, corporate and personal income tax collection was 10 lakhs crore. Today it is more than 20 lakh crores. So in 5 years, imagine, 5 years, your tax has around 20 lakh, is more than double, right? What is the kind of a growth that you are seeing? So if you see that, your total nominal growth, usually the tax collections grows only by the nominal growth, which is nominal growth is the real growth plus inflation. It has gone much more beyond that. So we are collecting more taxes without any intrusion, and the people are voluntarily, because all the statements are there in the AIS, all informations are getting linked, so all those things are happening. If you see the economy today, the kind of investments that are taking place in India, if you talk to anyone, if you open a YouTube and then talk to any world personalities, everyone is excited about India. And why it is so? Because they have watched India, that what India has done during the recent years, and what India is capable of doing this. So when I'm saying this, this is a very good thing. But at the same time, every good thing comes with a great sense of responsibility. And that is where, our role comes in. And what is our responsibility? That if a lot of people are trusting the, let us say, the stock market, or the equity market, or capital market, then who is going to safeguard the interest of the investors and the stakeholders? And that is where the role of the statutory auditors and various other institutions come in. And that is what something, because, all these good things, we cannot take for granted that, these things will continue and, India will continue to develop forever, right? Because, one major corporate failure is going to put a serious roadblock to the path to the development. We have seen, there are few examples during the last, maybe 20 years. We saw in US, just, when the whole world was booming with .com, and at that time this Enron crisis came in. And what happened? It was one incident. The people could have dismissed that, saying that, it is one incident, and therefore, could we have ignored that as an isolated incident? The answer is no. The world took a corrective action, and then they said that, look, the Sarbanes-Oxley Act came, and then the multiple reforms took place. And then also on the audit side also, the independent system of, the independent regulation. Sometimes, the people may feel that, look, we were earlier being self-regulated. Now, how is this institutions like in US PCOB, in UK FRC, or in India NFRA, somewhere, you must be feeling, you may not express it, you may express it, that, look, is this not something which somebody is taking away our rights? But the question is, these are the global trends. The global trend is to move towards the independent regulation. And why independent regulation? Not just for the sake of it. Because after all, the statutory auditors perform a very, very important job. They protect public interest. So question is, if we are going to protect the public interest, so what is the best model? How do you avoid? I'm not saying that in every case there is a conflict of interest. But conflict of interest is not when you address only when you see the conflict of interest. The crux is that how do you avoid conflict of interest, right? And that is where, all these Sarbanes-Oxley Act and came. I was mentioning about that one corporate failure. For example, in India, Satyam. One incident, what happened? During last 7-8 years, the few of the corporate failures that we have seen, ILFS, Cafe Coffee Day, and Yes Bank, DHFL, many of these cases in NFRA also we have dealt with them. I mean, each case, each of our orders is like a case study. I would urge all of you that even though those orders pertain to a particular case or particular statutory auditor, but it should be a case study for everyone. Saying that, look, how could anyone do like that? And then what lessons we draw so that, at least in the companies where, we are auditing, those things should not be repeated. So that is the purpose, and that is why, in the NFRA regulations, there are specific clause which say that every order has to be put out in the public domain. Because normally, when you pass any order, it is a bilateral issue, us and then the chartered accountant. But then the lawmakers thought that, we must put this in the public domain so that others also get alerted, and this is how it should happen. Again, I would say that these 4-5 cases, you see the total number of cases that we have dealt during the last 2-3 years is about 70. The total number of firms, the companies whose audits come out in our domain is about 9,000. So imagine, 9,000 every year. So in 3, 4, 5 years, NFRA was set up in 2018. So let's say, and then we are taking up few cases prior to even 2018. So in this 6-7 years, almost about 60,000 audits would have happened. Out of the 60,000 audits, we have handled only 60-70 cases. So definitely, these 60-70 cases do not present a, general picture of auditing profession where, I will agree with you. But at the same time, we cannot remain complacent saying that, these are only 70 cases, right? Because, one case can actually upset the entire, our roadmap of development. What happened in Satyam or the global financial crisis, one big bank comes down, the whole economy comes down. Imagine in this booming scenario, where the stock market is booming, and of course, it is taking a little bit of breather during the last few days. But then, let us say that, at this point of time, the 2 more big scams happens, right? What is going to happen? This 24,000 crore SIP from the domestic investor which is coming, will it not again become 2,000 crores? And then what will happen to our economy? So that is why, that is where, everyone who is sitting in this room, has a great amount of responsibility. I have said before that there are 5 lines of defense in the entire, the statutory, in the corporate governance. The Companies Act requires that, the management has to certify that the accounts are true and fair, right? So the first responsibility is of the management, the CFO and then the CEO, their responsibility, the first line of defense. The second line of defense is the board of directors, audit committees, right? It's there, that line. The third line of defense, I say, is the statutory auditors. The fourth line of defense is the stakeholders, the shareholders. And then the fifth line of defense is the regulators like us or the SEBI or the RBI, the regulators. So in this game of, or in this task of protecting public interest, the interest of the investors, all 5 lines of defense work. Just imagine, like for any country's defense, what do you have? You have a border security force, then you have army, and the various lines of defense, right? Intelligence and so and so. So therefore, in the beginning I used to find that many times the dispute used to be that is the statutory auditor only responsible, not the management? Or the management will say that, look, this is the corporate failure, and then the auditor should have pointed out. I say that these are the meaningless discussion. The law makes it very clear. There are 5 lines of defense. And if there is anything, the management, in my view, management is more responsible. That's because they are the first line of defense, right? The second line of defense is the audit committee and then the board members. Third line of defense is the statutory auditor. And in that exercise, we are also not, we can't, just simply say that, look, we are the auditor and therefore we are not responsible, we are only going to be the kind of a regulator. No. We are only 6 years old. And then let us say that if unfortunately some corporate failure takes place, in the years to come, God forbid it doesn't happen, but in case it happens, do you think NFRA will be able to escape the responsibility? And at that time we will say that, no, this auditor didn't do the job or audit committee didn't do the job. Answer is no. So in this exercise, all of us are together. And that is where, we all have to work together to ensure that ensure corporate governance and transparency in reporting and so and so. So this is something which is extremely important, and this is what I have been emphasizing. Another very important thing that I must say that, when we dealt with some of the very, very important cases out of those 70 cases, what I felt that, you may have heard, and I have mentioned this before, the very 2 major corporate failures which took place in the world, almost 100 years back. In 1920, after bubonic plague, after World War I, the whole world was going through a lot of stress, and then it was a precursor to the Great Depression. The Kruger and Toll case, where, some Swedish person came to America. He was a matchbox king, known as a matchbox kings of Europe. And he acquired a famous telecom company called Ericsson and set up a large number of subsidiaries and started raising money, capital. And he was paying such handsome dividend those days, 20%, 30%. And how was he doing this? He was raising more capital to pay dividends. So it became, over the time, Ponzi scheme. And finally, it collapsed. And then he committed a suicide. And that was the trigger point for formation of ACC, Security and Exchange Commission in US. There was no ACC before that. The ACC Act came somewhere around 1932-33. So that was the ACC. Then there was another major incident during the same time was happening, McKesson and Robinson. He was such a fraud that he was convicted of bootlegging or something. But he changed his name and became a Dr. Donald Coaster. Imagine, McKesson and Robinson, convicted of bootlegging, changed his name, because apparently that time there was no Aadhaar type of KYC right there. So he changed his name, and then he became Dr. Donald Coaster. and he used to make cough syrup, kind of a thing. And then again, he had a large number of subsidiaries. And through these subsidiaries, he created a fictitious sale, fictitious inventory, jacked up the stock prices, and so and so. Finally, somewhere around 37, 38, the entire thing collapsed. And that time, again, a major reform took place in the US. They said that the auditor will be appointed by, these two incidents, two things happened. One, the SEC came, then they say that, the auditors will be appointed not by the company, but by the shareholders, and also will be recommended by the independent board of directors. So that is where, the audit committee and then the independent director institutions came. That was the time when, and in case of a McKesson & Robinson, Pricewaterhouse was their auditor. So there was a dispute whether, they are supposed to verify the inventory. It's a very interesting discussion. All of us, these things are available on the internet. And maybe Kulkarni can help you send the links. It's a very interesting discussion, when the discussion took place in the SEC at that time. And, it is there, that proceedings are there, the discussion that, what we should do about it. And then that time, the auditor was saying that, look, it is not my job to physically verify the inventory, right? But then, it was clarified that no, it is your job to verify the inventory. So some of those things, many of those path-breaking things have come. And since then, basically the institution of a regulator, a stock exchange regulator, institution of a statutory auditor, their appointment by the shareholders, the audit committee, and so and so. So these are some of the things which took place. But again, I must caution you, because if at that time if the world had brushed aside, these two are the stray incidents and not reflection of the entire, the auditing profession, then perhaps, you would have missed the bus, right? So therefore, it is very, very necessary, because, we all know that, Justice Lopez said in Kingston Cotton Mill case in 1894 that, the auditors are the watchdogs, not the bloodhound. So the watchdog has to be very, very alert, right? Even if there is a single, there is some perturbation somewhere, the watchdog should be alert, right? So that is something that's very, very important. Also, I must point it out to you that, Justice Lopez, gave that statement saying that, the auditors are a watchdog, not bloodhound. But in the next sentence, do you know what he says? He says that, if you suspect any wrongdoing, you must get to the bottom of it. So what happens is that over the period of time, historically, we have just taken the first part of the sentence and we have forgotten the next part, right? So therefore, I'm trying to remind, all of us here, saying that, what he said, the same person, same judge, right? This is what he said, right? Because, this is what something, we need to be, very careful about it. And we must be, whenever these things happen, we must realize, saying that, no, this is how it should be. So, so those two incidents happened there. So I was looking for, and then after this Enron, if you look at, the connection, this, the current discussion, I must say, I think during the panel discussion, I am very, you must be also eager to hear about, SA 600, right? The draft that we have sent, right? Now, if you look at the overall context that, why, we need to align with the global standards, right? Now, this entire SA 600, which is internationally the global standard, have been revised, in 2002, then 2009, it has been revised. What was the need for revising? If you see some of the corporate failures which had taken place, including Enron, is a classic case of, all kinds of subsidiaries in Enron cases, right? And in fact, you would know better. And that is why all the standard setters across the world, IASB, and they said that, look, we need to do something, and therefore they gave a certain responsibility to the group auditors, right? And that is the genesis of the ISA 600. But in India, we chose, for some reason, not to upgrade it because of certain, I would say that some perceived notion that, it will create a lot of problem here. So at one hand, we want to become a global power. But when it comes to issue of following global standard, we say that we are different. This kind of a dichotomy, do you think it is reasonable, right? Who are we trying to convince, right? So we want to say that, we are the global power, we want to create, why do we not have, our Prime Minister has mentioned several times, our Finance Minister mentioned recently, that why do we not have an Indian Big Four, right? But for that, if you look at the basic, the talent pool of chartered accountants in India, we have the largest pool of chartered accountants. The examination introduced by ICI is of a quality standard. I have said this before, that, so far as this examination part is concerned, this examination system is very, very rigorous, tough, and it does bring out, the best of the people in this profession. The total numbers, including those who are under the profession, will be somewhere around 7 to 8 lakhs. The total chartered accountant. Maybe in the practice, maybe only about 100,000, but then otherwise total numbers. Such a large talent pool of a chartered accountant. And I see there is only one parallel in India here. That the IT professional, information technology professionals. And I remember that in 80s, 90s, when this whole trend started. And then in India, the only big IT companies were, all these multinationals. The IBM, then there were, I still remember, there was a Borough, and then the Tata Burrows Limited, TBL, these are few of the companies. So what happened was that this IT, the Indian IT industry, they must have done some introspection, and they say that if we want to become global, we have to conform to the global practice. Whether it is a software development process, software quality process, or the security process. And then, they adopted this, and so that, their people they can take the work of a job anywhere in the world. So today you see Infosys, TCS, Wipro, Tech Mahindra, LTIM, the number of companies today, they are dominating the world. Why can't that happen in the accountancy and auditing profession? We cannot just say that, we are the best, and therefore, we don't need to do anything. Actually, you must have heard the proverb, is the best is the enemy of the good. But, my views are very different. I always say the good is the enemy of the best. Because, we say that we are good, and therefore, we don't try to improve further. And that is where, some amount of introspection is required. So unless and until we align ourselves to the global standards, and then, get over this habit of, the tinkering with the global standards, under the pretext of Indian pride, right? In the sense that, we have adopted global standards. What is internet? Internet protocol, is that, did we say that, look, in India we'll follow a different internet protocol? The different security protocol, right? Did we say that? So if you want to dominate over the world, and if a third largest economy we are soon going to become, and if we are going to become a 55 trillion economy, we have to integrate with the world, and we have to follow the global standards. And only then, and this one, not only it will make, our chartered accountant or accountancy profession a global power, but also imagine the amount of trust and confidence all the investors across the world will have. Do you know, we are talking about the investments, right? And we are very happy with this 24,000 crore coming every month. How much it is? 3 billion US dollars. In 1 year, 36 billion US dollar. Do you think India can be very happy with this 36 billion US dollar coming every year? The various pension funds, like, the various pension funds across the world, do you know how much money they have? $70 trillion they have. They are looking for the areas where they can make investments. 70 trillion US dollars. How will that money come into India if they are not very sure that the company in which they invest, their auditor will hide behind the current SA 600 and say that I am relying upon the audit report of the component auditors and not give a true picture? Whereas the whole world is, if they have invested this money in, let us say, Indonesia or maybe Australia, their auditors are giving full responsibility. So why this is not happening? So therefore, so many times, this has been my experience, that whenever you try to bring any reform, there will always be lot of, I would say that, I have said this before, some notion of perceived pain. Like, when you go to a hospital, then, you will feel that, I don't know what will happen. Some amount of anxiety is all right. But then, if you are not going to improve, right, then, you must understand. I saw that, when I was working on this Aadhaar project. And I remember that, you all must have known that, every one of you must have been worried. Ki if I open Aadhaar card, Aadhaar enrollment, my bank account, somebody will take my money. Somebody will know that, what I am eating. And there was a famous joke circulating around that, you ordered for a pizza, he access your health records, he access your bank account, he access your credit rating. And then, some of the people said that, this will turn India into a surveillance state, that the government will know your exact movement and so and so. So where are they? It's just 6, 7, 8 years back. You must have read, right? And Aadhaar, actually, what happened was it created, this kind of a discussion in every family. I used to have, a very serious discussion and differences with my own family members, my own daughters. But today, everybody feels that it's very good. And then we are talking about the digital public infrastructure. Same thing, when we were introducing GST, they said that GST is going to kill a small business, right? And then the GST will create a lot of problem. Even the, I believe, accountancy professionals, I remember, the Twitter at that time, if you see, how much abuses we had to suffer from everyone, including the chartered accountants. Recently, when I was trying to introduce faceless assessment in income tax, now all my income tax officers, they said that what will happen to us? We will be working only on the cloud. What happens to our existence, right? Who will recognize us? We said that, look, your job is not to get recognized in this manner, right? In this manner, right? This is something, and so I will say that this is the all perceived, the notion of perceived pain. And then in 6, 7 years, so the reforms are always, the people say that, reforms always have pains. I will try to modify that. Some reforms may have pain. I can't say that about, all reforms. But I would say that, some reforms have only the perceived notion of pain, right? This is something, right? And, in this particular case, let's say in ISA 600, when whole world has adopted, right, they did not have much problem. They adjusted, and they are doing fine. Then, to say that, our Indian conditions are such that we cannot do this, tell me who is going to accept this argument, right? This is what, I would like all of you to introspect, right? And when you are doing this, don't see that, like, income tax officers. When we introduced this faceless assessment, they all were very, very unhappy that what will happen to us. Similarly, I understand that, yes, if that happens, our auditors will have to work a little more, right? Because they will have to take the responsibility, of the entire audit, and also go into the accounts of the audit of the component auditors. So all those things will happen. But then the best thing is that we have the experience of almost 15 years of its implementation across the world, right? And so today, let's say if there is any doubt, I would say that look at what was done in Australia, for example, what was done in UK, right? Some of those countries, right? And how did they solve this problem, right? So one day, I was talking to one of my friends who has become independent director, and he's the chairman of the audit committee. So he was saying that no, this will have a big problem. I said that how? So no, our statutory auditor was saying that this will be not possible. Then I said that, you are the statutory auditor of a multinational company. Why don't you ask your, the parent company, auditor in other countries, that how are they dealing with it, right? So, and then I said that, look, the point that you raised about the remuneration, I feel that, well, at least, because, whenever I pass these penalty orders, we also seek that how much remuneration he has got. And I feel that, the kind of responsibility that are, expected out of the statutory auditor, the remunerations are not commensurate with the responsibilities, right? And therefore, in this particular case, as a profession, you have to come together, right? And not undercut each other to get some audit somehow, right? And then say that, SA 600 requires us to, exercise more, do more work, and therefore, in this money we can't do this. Who asked us to, quote so less? Who asked us to undercut so much so that, it becomes, it becomes a very challenging job? I mean, this solution has to be found by the profession itself, and that is why, the Karnataka State Chartered Accountant Associations, you all can play a very, very major role. So I think, so that is why, so if you see the experience in the other sectors, the reforms, because, once in the beginning I said that we faced the problem in Aadhaar, a lot of misgiving, apprehensions, UPI, income tax, GST, there are a number of examples. I'm not quoting something which happened, 50 years back or 100 years back. You have seen in your own lifetime, and you have seen this, and you are seeing the benefit. Similarly, if we align, and if we align ourselves with the global standards, we improve the level of corporate governance, the quality of a statutory audit, and improve corporate governance, it will be a big thing in India. It will inspire confidence. India as a country will inspire confidence among all the investors across the world, where the huge opportunities are lying, and which cannot be met only by the domestic investment. We have to get investment from everywhere, domestic, foreign, pension fund, everywhere. I was very interesting that in the ICAI, that Sanskrit slogan, Ya Esu Suptesu Jagrita, right? So it says that, the job of the auditor is to awaken those who are sleeping, right? And that is where, the whole concept of watchdog comes, in 1894, right? Right? Because dog is supposed to wake everyone up. But the question is that who is going to awake those who are pretending to sleep? Right? And that is where, the whole fraud and other things comes in, right? When you find that, I'm not saying that, the auditors. For example, let us say the management, for example, right? And management, when the management is trying to do something which they shouldn't be doing, right? And when you find the instances of this, some suspicion of this, then in that particular case, your role also should be different, right? You have to see that, okay, look, this person is awake. How do I make him awake further? And that is where, your role becomes very, very important. And so, therefore, nobody is saying that, the auditors are, should always detect a fraud. No, the answer is obviously no. And that is why, in the Companies Act, there is a provision. The provision is say that, if you suspect a fraud, then you should be reporting it, right? The SA 200 actually defines professional skepticism, right? That is where you say that, there is if you get some indication of a fraud, you should be able to do this. But what happens? Many times, and in fact, we had to issue a circular last year. That, one circular was issued saying that if you are not the first person to find, then you don't. Now this, I am not able to understand. Okay, first of all, who is going to determine that who is the first person to find, if a whistleblower or somebody? So when the law requires that a statutory auditor, because, the government wouldn't be bothered if there is a newspaper report saying that there is a fraud or some whistleblower has, but if a statutory auditor says that, yes, I suspect a fraud, then that has a different, different significance. And that is where the law was brought in. But when we found that, because, this was being misinterpreted, so we had to come out with the circular. Same thing about the, current SA 600. Even though we may have issued the draft, on the global lines, we found that even the current SA 600, the current SA 600, if you see, the most of the other SAs, they use the word shall. Here, the most of the word is should. So in some of the proceedings, when we ask the auditor saying that, why did you not do this? He said, it is should, therefore it is not compulsory. I said that, why it is so? There are a number of Supreme Court judgments, and that's why, we had to come and clarify that, should does not mean that it is discretionary. And it is the sweet will or choice of the auditor. Should means that, you are normally expected to do it. And if you can do it with some other means, then, you may not follow that procedure, but then you are expected to do some other procedure, equivalent procedures. So we had to come out with these circulars. So basically, what we are trying to do is, because what we felt that, you see, the other job that we have to do, the passing this disciplinary order, this is the most unpleasant job that I hate. Ideally, I should be doing only the job like this, talking to you and then, learning from you and then learning from each other, right? But that particular part of the job, because the law requires us to do that, so we have to do that. But the question is that unless and until I create and I inform people about the, the expectation and then the correct interpretation, more and more people are likely to commit mistakes. That is why, some of the circulars that we do, so that the others can also draw lessons and not fall prey to some, the different interpretation or different kind of guidance. So I think with this, I will end here, and I'm told that there is also some kind of a discussion, so we'll get more chance to speak about this or hear from you, your suggestions. So thank you very much once again.
Thank you, sir. It was such a wonderful speech to know. It is wonderful to know the positive growth story of India. And we are a generation which has seen the India which it was, and we are also a generation which would probably see the India which would be. Like a phoenix which grows from the ashes, we'll also presume, or we are very hopeful that India also comes there. Dear members, I know there are a lot of questions which you want to ask, but there is a lot more in the store today. So we will next move on to a discussion by NFRA. We have presentation by NFRA, which is NFRA activities, presentation by the officials. May I now request CA Shivaprakash Viraktamat, Vice President of KSCAA, to accompany CA Arun Kumar AS, Executive Director NFRA, onto the dais. Arun Kumar is a chartered accountant by qualification. He has 22 years of post-qualification experience in management, finance, accounting, auditing, audit regulation, and information technology. He started his career as a practicing chartered accountant and worked with a private company and public sector undertakings such as BSNL, HLL, Lifecare, and Kochi Metro. For past 5 years, he has worked with NFRA and presently he is one of the executive directors of NFRA. May I now request CA Praveen Shettar, Secretary of Karnataka CA Association, to accompany CA Vidyadhar Kulkarni, Principal Consultant NAFRA, onto the dais and welcome him with a floral bouquet. CA Vidyadhar Kulkarni is a qualified chartered accountant with 30 years of experience in the area of financial reporting, consulting, and banking in India and overseas. He has interest in the exposure to wide variety of areas like IFRS, Basel II, finance control, and assurance. He strongly advocates of embracing global best practices and emerging economies, taking a proactive leadership role in global initiatives and forums. He is an active supporter of reform initiatives of regulators, industry bodies, and learning centers of excellence, and have been a member of working group and a guest faculty at Learning and Knowledge Center in India. Over to both the speakers.
Good morning to all of you. So here we are starting our presentation. This is basically a brief introduction about NFRA, the history of NFRA, and we are also taking you through some of our important audit orders just as a case study. So before we start, I will start with the usual thing, the disclaimers. As I said, more than during our practice days, we issue disclaimers more during our exam days. When we see the question papers, the CA final question papers, we used to issue a lot of disclaimers. But now, again, in the profession, the disclaimers are less. This is what we feel. Now, with that disclaimer, these views are purely our personal views. It is not of NFRA or its members. Today's agenda is these 5 items. One, we will give you a brief introduction about the high-quality financial reporting framework. What do you mean by this high-quality thing? Then a brief history about NFRA. Then few learnings about NFRA's disciplinary orders and a summary of the findings. And for us, this is a high-risk presentation because our boss is looking at us. And if something goes wrong, tomorrow we will get a disclaimer at office. So with that disclaimer, I'm handing over to Kulkarni ji for taking us through the high-quality financial reporting framework.
Yeah.
Please.
Good morning, everybody. Very quick initial introduction of this. What does this high-quality financial reporting framework means? Many of you may have come across these words being used, whether the regulators or even some of the CFOs and some of the experienced finance professional. So one thing is important to understand that it is not just a kind of a buzzword or a glamorous word which can be used just any country and anybody says that in my country I have high quality financial reporting framework. So in fact this has some 6 elements or the infrastructures any country need to have if it need to say that it has a high quality financial reporting framework. It came in the context sometime in 2000 when Security Exchange Commission US was considering adoption of the IFRS standards for their listed companies. Am I audible? Yeah. So in that context, so everybody was saying, every country, that my standards and my framework is the high quality. But they said it's not so. It need to have these 5 elements. And the first 2 are basically, they said that you need to have high quality accounting standards and auditing standards. There they laid down some of the prescriptions the standards when they prescribe need to have certain way of, you can say, the contents. Like you have seen a huge change which has happened. Seen the accounting standards, etc. Some of the old persons like me, you may have seen 4 pages standards, AS5, AS4, etc. We just laid down the principles. But those need not be called high quality financial standards. Like if you see the indices which have come in, like clearly laying down the objectives and then the main requirements, comprehensively principles laid down, and then there is application material, and then there is a basis for conclusion for the standard setter to say why they came out with that one. So you need to have that. Similarly, in the auditing standards also you have seen how the essays got changed in 2009 onwards. Chairperson sir mentioned about that word expression shall and should. The shall expression came 2009 when the globally the ISAs got changed, and shall means it is unconditionally mandatory, the procedure. So like that you need to have those high quality standards, and then you need to have the standard setting has to be by an independent standard setter, and that person has to be, that body has to be independent standard setter. Of course, many of us like me belonging to the profession may not like it, but the world since 2000 has moved from self-regulation to the independent regulation, and that is the expectation of the public and the investors. So that is required, and then of course there has to be, fourth one is, there has to be firms, audit firms, to ensure that those standards are met effectively. They need to have, because the corporations and organizations have grown large, and there are many of those in multi-geographies, etc. You need to have those kind of firms who are capable of doing same quality services across the entities. That was also one of the requirements they said. And another fifth one, very, very important, there has to be professional-wide quality assurance. This is where all the professional accountancy organizations have a very important role to play. They are the one who are going to ensure that its members, there is a quality is there. Like we have a peer review board, and there are many other mechanisms which the profession need to have, like continuing professional education and the quality of the examination itself. That all comes under fifth. And then the active regulatory oversight bodies, like PCOB and NFRA, FRC, which chairperson mentioned. So these are the ones. So if you have all of these effectively, then one can rightfully say that claim, yes, there is a high quality financial reporting framework. So this is one, just a quick background. I wanted to give it to you. Now, Arun Kumarji, go to the next.
Thank you. I am not taking much time on this slide. We know that the history of all these scams, since the Harshad Mehta scam in 92 and in 2018 the ILFS failure. So why this slide is because this shows an indication for the need of an independent regulator in India at that time. By 2018, when the ILFS scam broke, there were almost 50 countries where independent regulators were functioning, starting from the US PSOB in 2002. Then in 2018, between March and October, the Section 132, which is the Bible for NFRA, which is notified by the government following the PNB scam in 2018. And all sections of, subsections of 132 came effect in by 24 October 2018. Composition of NFRA, by now all of you know, but still just a recap. It consists of a chairperson and not exceeding 15 members, out of which maximum 3 are full-time members. The rest are part-time members. Presently, we have 2 full-time members and the chairperson. The part-time members are from ex officio members from MCA, C&AG, SEBI, 3 members from ICAI and RBI. And also we have 2 experts, they are again chartered accountants. Then all members of NFRA, including the chairman, shall give this declaration of independence and certificate of no conflict of interest. So that means the law ensures that the full-time members and the chairperson is independent of the profession. Then even after their tenure term in NFRA for 2 years, there is a cooling off period. They cannot associate with any audit firm or related consulting firms. Coming to NFRA's functions, which already briefly touched upon by the President, we have broadly two functions. One is the standard setting functions, which is taken care of by the whole body, the body consisting of the chairperson and the all members, full-time and part-time members. The rest all functions are taken care of by the executive body. Executive body means the chairperson and the full-time members. As of today, from the first function, that is a standard setting function, NFRA has recommended and government has notified amendments to 47 Indian accounting standards, which includes two new accounting standards, the standard on lease and the insurance, 116 and 117. Then accounting standard, 27 accounting standards were re-notified under the new Companies Act, under the 2013 Act. Then accounting standard revision project is also ongoing. There is a regulatory impactment assessment study being performed by the ICAI on this project. Then accounting standard for LLPs is already recommended to the government, 26 accounting standards. Then coming to the standards on auditing, CARO 2020 was the one of the first assignments NFRA has recommended to the central government. Then a set of 35 standards on auditing, and SQM is under review with the authority now. Exposure draft on SA 600, as you all know, is issued. Earlier in 2022, I think 3 special essays, the SA 800 series, were examined and certain amendments were recommended to the government by NFRA.
Just here I want to add one important information. Many times some of our members still are not aware of the scheme of standard setting under the Companies Act, whether it is section 133 or 143.10. There is the expectation or some comments which we saw in our orders, etc. It's without criticizing anybody, that they said that where are the standards issued by NFRA? If you see, NFRA is not going to issue a separate set of standards as such. There is a scheme where the recommendations come from the ICAI, NFRA reviews those recommendations and recommends it to the central government, Ministry of Corporate Affairs, and they are notified as under the company's accounting Ind AS rules or accounting standards rules, or the essays when they come in companies auditing standards rules, it will come. So that's why you need to be monitoring what are the standards which are actually prescribed under rules by the Companies Act itself. Those are the ones which NFRA uses them to enforce compliance with those standards. So that was the objective that we just mentioned this slide.
Thank you. Now coming to monitoring and enforcement of standards, we do different sort of functions. Audit quality review report is one such function where we review an audit in its entirety, from its planning and acceptance of audit until conclusion. We review everything in an audit and we come out with a very detailed kind of report. It's a long drawn exercise. It may take sometimes up to 1 year to complete one audit quality review. So until now we have issued 5 audit quality review reports of 5 different audit engagements of 4 different companies. Inspection is another tool which we use to more to engage with the auditors as well as to monitor the quality aspects. 5 inspection reports are already completed in the previous year. Reports are available in the public domain, and 7 inspections are already ongoing for this year. Then financial reporting quality review report is another instrument which we use, where we review the financial statement of a company purely from the perspective of compliance with the accounting standards or the Indian accounting standards. The audit quality review report, the focus is on the standards on auditing. The financial reporting quality report, the focus is on the preparers of the financial statement. Now, the second limb of the quality monitoring functions is the issue of circulars, engagement with auditors. This aspect, 4 circulars are already been issued, that covers the duties and responsibilities of the principal auditor, the latest one. Then circular on policies, revenue accounting policies. Then a circular on the fraud, which the chairman briefly mentioned here, reporting on fraud under section 143(12). Then the first circular on accounting of accrued interest on borrowings. So 4 circulars are already issued, 6 consultation papers, the latest being the ISA 600. 9 webinars, 2 conferences, including 1 international conferences, and public interactions like this. We mentioned the speeches by chairman. It is interaction with the profession by the NFRA members and chairpersons. So far, 34 engagements of that sort. Maybe majority of this engagement happens in the past 2 years. I can say on an average 1 or 2 interactions per month is happening nowadays. Now coming to the disciplinary actions, 76 disciplinary orders are issued so far, covering 19 audit firms and 83 partners or proprietors, and 35 public interest entities. In some of these cases, the appeals are now being argued at the NCLAT, and in 3 cases it went up to Supreme Court, and Supreme Court ordered like this. We do not find any good reason to interfere with the orders of the appellate authority. Now we are proceeding to learnings from disciplinary orders. Over to him.
Here, when couple of based on the disciplinary orders which were issued, we are just trying to explain what we had found from our perspective at NFRA. That will be, want to highlight that, so that for the others also there is a benefit to actually learn from that, and so that prevention of future such kind of mistakes, etc., will not happen. The idea here is not to actually sort of criticize or sort of humiliate any auditor or any audit firm or any company for that matter. It was just an exercise here which we are doing is just to educate or share our views with the audit profession, an important profession, about what are the important things which we found as a regulator, as a which is professional misconduct. And one more thing I want to just mention to you about this audit quality review reports and the inspections which Arun mentioned previously. The audit quality reports, if you see, they are quite detailed sometimes, and those are in case where there is a corporate scam or failure has happened. Although it is called an audit quality report, it actually partakes the nature of an investigation report kind of a thing. There is enough kind of opportunity given to the audit firms also to explain their cases, and the size and the contents of the report is, you could say that some can call it as an investigation report itself. So that differentiates from the annual firm-wide inspections, where these are, if those relate to companies which are not into any of these having bad features, then it's more a learning exercise and a communication of how to improve in future by the audit firm. And now this one particular order which was passed in July 2023, it was a case, one interesting first point was about the understanding of the disclosure related to the related parties in days 24. Here the auditor's understanding was actually quite contrary to the object of the standard. So there was some disclosures were not made of the loans which were given in the previous year, but they continue to be outstanding in the current financial year. So the auditors argued that no, these are related party transactions that have not happened during this year. So that's why I will not disclose. But if you look at Ind AS 24, it requires you to disclose what are these related party transactions will have impact on the balance sheet, profit and loss account, and cash flows and all that. So imagine if that kind of a line of argument is taken, I will only disclose what has transaction happened during the year. Imagine 2 years back somebody gave a loan, related party, huge loan with the interest-free loan, and that is not disclosed in the current year. Then the users will not understand why the interest expense or interest income of that is not commensurate with the balance sheet size. So that's why whether given during this year or the previous year, if the balance sheet transactions are outstanding, that need to be disclosed. This was a very important learning from the company's perspective also is very, very important. And the other one was there was a credit risk in the trade receivables. There was a significant increase during the audit period. There were a huge amount of write-offs that had started happening since previous year. And the internal auditors' reports were also telling that there are a lot of disputed receivables in this entity. In that connection, when you compute the expected credit loss under 109, the auditor should have actually challenged the management and questioned more that why only tiny amount of the provision is there, why when there are already a lot of indications saying that your huge amount of receivables are disputed, and the fact that during the current year itself and the previous year also you have actually written off large amount. And when the auditor himself says that 16% of the receivables are under dispute, etc., then the management in that case made credit risk in trade receivable is low. Isn't it contradictory? Ind AS 107 requires you to disclose qualitative aspects of the various risks, etc. When the balance sheet and financials show a different trend, but the management wants to say that it is low, the auditor should have challenged that. Of course, the Ind AS 107 has for trade receivable also certain amount of disclosures of each bucket wise, what is the amount of outstanding and what is the ECL against each of those buckets. And if you look at the IFRS guidance notes, which are already published along with the Ind AS here, it actually gives you a good amount of a format actually disclosed. So that was not done, and the audit firm continued to argue that even with this 16 or 34, 16% of receivables disputed, etc., the credit risk is still low, which any credit risk expert I think wouldn't believe it. Anything more than 5% is a high risk kind of a thing. And then this was another learning which in this case we noticed was the audit procedures and the documentation part of it. SA 315, which is a very, very critical important standard, identification and evaluation of risk of material misstatement. In my view, if you do that standard thoroughly, properly and document it, 60% of your audit will go well. But if you don't do that part, SA 315, how many of you have read SA 315? Good, very good, large number. It's a quite more than 100 pages standard, right? So if you do that correctly, you will actually, lot of things which NFRA's order you are looking at, you will be able to address that. And here the audit firm didn't do that well. And I'll tell you in this firm, the documentation in this case was audit work papers, more than 5,000 pages. This is not a company of a Tata Steel or that kind of size, but 5,000 papers. What all those papers? All photocopies of invoices and some general ledger extracts, but you can't make out what audit has been done with reference to those papers. Remember, it is not necessary that you need to take photocopies of entire set of the general ledger and the invoices. In fact, you might be carrying a risk of violating confidentiality requirement of the clients if you do that, and especially if you don't have a good control over work papers. So this was a case of a collection of reams of papers basically. And there was another very interesting area was the non-consolidation of a subsidiary, and there was a subsidiary which was under dispute between the promoters, and previously they had consolidated it, and the matter went to the court, and then they actually stopped consolidating that. But the auditor did not question that what has happened, what is the subsequent court case, what is the decision, why you are not consolidating it. That was another area. And of course, this communication with those charged with governance and determining material rates are not there. Go to next. So another area which we noticed here in this case was investment valuation experts report. Very, very be careful. Yesterday, other day also we have issued one order on this, which has a lot of responsibilities on the auditor, like when do you expect management's experts valuation report. Just don't simply take the report and file it in the work papers. Check the assumptions, and first of all check whether that valuation report does it meant for the accounting purposes. Sometimes these valuation reports are meant for income tax or some other purposes. So they may not meet your Ind AS 113 or Ind AS 36 requirements. So in this case also we had that situation, and especially this subsidiary which was not consolidated, valuation of the shares of that unlisted entity, the valuation expert said that there are contradiction in his assumptions. He said that there is no comparable company available, but for using certain data for calculating fair value, use some comparable companies data only. Then if that is available, then why can't you use the share prices of those comparable companies? And the first and foremost, if there is a dispute about the assets and liabilities of that company, then the valuation expert need to actually factor in, right? This was not challenged. So these were the few major areas which we had noticed here. Yeah.
So next case coming from another audit. So this is an NBFC, and this case again is an example for, or how we can relate this to SA 600 or SA 600. So in this case, as we know, the group components which is defined in SA 600 includes the branches as well as the subsidiaries, associates and joint ventures. And this audit has both these components. One limb there were a lot of 250 branches. On other limb, lot of subsidiaries, some subsidiaries which get omitted from the consolidation. So first coming to the branches, this company operated through 250 branches, and it is into the business of financing. Now we know there is a lot of difference. There is at least one remarkable difference between the 1956 Act and the 2013 Act regarding the appointment of branch statutory auditors. In the 1956 Act, there is a clear mandate to the the shareholders to authorize the board to appoint a branch statutory auditor. That power has been deleted from the 2013 Act. Section 143(8) only mentions that branch auditors should be appointed as such under Section 139. 139 talks about appointment by shareholders, except maybe in the casual vacancy case. But here lies the difference. Statutory auditors appointment under the 2013 Act regarding the branch auditors as well as the company's auditor should be made by the general shareholders in the general meeting. So this difference is overlooked in this particular audit. That was the first issue which we noticed. There was a statutory auditor appointed by the general body through a proper resolution, who was given a clear mandate to audit the company as well as all its branch offices. So this was the resolution passed. Then later on, somebody in the company, not even the board, somebody in the company issued some appointment orders to almost 33 engagement partners of different firms to do branch audits of this all 250 branches. And that appointment letter says, you are the statutory branch auditor appointed under the Companies Act. Now, both set of auditors, the company auditor undertook his work, the branch auditors did their work, but there was a lot of issues in these two engagements. First of all, the company auditor, when he issued the audit report, he clearly reported in his audit report that I have audited the company's account and I received audit reports from branches audited by auditors appointed under the Companies Act. Secondly, he also said, I dealt with those reports appropriately. So dealing with this audit report of branch auditors as per section 143 arises only in one situation where there are separate set of branch auditors and the company's auditors. Company in this case have clearly decided to have only one auditor. Then the audit report goes on to say that I also received return from branches audited by other auditors. So these are typical language which we use when we have separate set of branch statutory auditors as well as the company auditors. Then when we questioned, when we issued this show cause notice, he came back and said to us that no, I am the only statutory auditor. There were no other statutory auditors appointed by the company. I am the only statutory auditor. I did all the audit, including the company as well as the branches. But the audit documentation and the audit report says differently. The audit documentation says very clearly that there are branch auditors and the branch auditors reported to the statutory auditor. He has received all this report. He has documented all those reports. He even presented to the audit committee that I have received reports from the branch statutory auditors and I dealt with appropriately in my report. So this contradiction was there. Secondly, apart from these legal issues, we looked into the work of these auditors. What the statutory auditor did at the corporate office level and what the branch auditors did at the branch level. None of these auditors have gone through the risk assessment, either at the branch level or at the corporate level regarding the branch operations. These branches were carrying significant operations. The loan transaction, for an example. This is a NBFC, the loan is the main portfolio. The entire loans were getting managed by the banks, sanctioned by the banks. They were dealing huge amount of cash balance. A lot of other other operations also. In fact, the statutory auditor himself listed 33 key operations handled by the branches. Now, the branch audit report, if you look into the branch audit report, no risk assessment, no control testing, and the reports which they issued, none of these reports comply with the reporting requirements of the SA, particularly SA 600. So when we questioned again, we got a lot of replies from the branch of auditors. The majority of the replies says that we are not required to comply with SAs. Again, this is a wrong understanding because we know very clearly that SAS applies for all audit of financial statements. Then the statutory auditor, he himself says, I audited all the branches, but the audit file shows no evidence of his auditing of all these branches. So all these issues we can see it happened because of lack of proper coordination between the auditors, lack of proper understanding of the scope of the work, and as I said initially, there is no risk assessment, either at the branch level or at the head office level. So we came to a situation where neither the branch auditors audited properly the 250 branches, nor the company's auditor audited these 250 branches. So this is the first issue which we noticed in this order.
This is the classic case of why we need ISA 600 kind of a thing, where there is a effective coordination and audit happens from the principal auditor, also the component auditor's point of view.
Exactly.
There has to be good planning, communication, and effective oversight by the principal auditor. So this case explains. And another interesting point which about this, there was one branch, fictitious branch which was created here, which had a large amount of advances. Which,
maximum amount of advances were there in that fictitious.
So I think it was not audited by really anybody. So it reminds us what Chairperson told about those Mackeson, Robbins and Kruger and Toll case. There also the situation was there, creating fictitious divisions and units, and the auditors missed looking at what kind of transactions go there.
So the second issue again has a direct impact from SA 600 is the consolidation. It does not have not that many number of components, but it has some good amount of components, and one material subsidiary, which is a 100% subsidiary, is kept out of consolidation, altogether kept out of consolidation, citing some reasons. Now this subsidiary, what the importance of this subsidiary was, it was carrying a huge amount of loan, 2,000 crore of loan in its books. The money received out of this 2,000 crore of loan has been transferred to the holding company by way of a sale of an investment. So holding company sold an investment to the 100% subsidiary. They paid 2,000 crore to the holding company. The money is now with the holding company. And on this sale transaction, the holding company also booked a profit of around 1,900 crore. So the holding company's balance sheet is now looking very good. How the subsidiary funded this transaction? They borrowed. They borrowed from a related party. That related party borrowed from the market. So the funds from the market through the related party reached the holding company. Now they did not consolidate this 100% subsidiary. So that the borrowing is now sitting in the subsidiary's books, and the assets, the investments and the cash is sitting in the holding company's books. There is no consolidation. The reason for not consolidating was a provision which they cited from AS 21, which gives an exemption. The only one exemption which AS 21 gives in consolidation is that when you acquire a subsidiary with an intention to dispose of it in the near future, then you need not consolidate. AS also goes on to explain that near future, what near future means. Normally it is 12 months, but if facts and circumstances is evidencing something more, then you can have a larger period, more than 12 months also. But the key condition there is that the intention to dispose of in the near future should be recorded at the time of acquisition, not any time later. So at the time of acquisition, either the board minutes, board resolutions, or any communications issued by the management never said that this acquisition is for disposal in the near future. In fact, even if we go by the submissions made by the auditor, the disposal will happen after 8 years, may happen after 8 years. There is no assurance for that also. So this 8-year period can never be considered as a disposal in the near future. So that reason for not consolidating the subsidiary will not hold good. It is not evidenced. So by not consolidating the subsidiary, again, the company was able to show a good picture in the balance sheet. Again, there is different auditors for the subsidiary as well as the holding company, and suppose there is good coordination between these auditors, proper risk assessment, then this kind of situation would have been avoided. So again, this is another issues which is arising out of the same audit. Going concern issue. Going concern issue also, the fundamental of going concern is that management do an assessment. Management should do an assessment of going concern, then the auditor need to verify it. If management did not do an assessment, the essay gives you prescription how to address these situations. In this situation, none of those prescriptions are followed. Management did not do an assessment. Auditors also did not ask management to do an assessment. Instead, they did their own assessment. Auditors did their own assessment and concluded that there is no uncertainties in going concern. In fact, there were a lot of uncertainties, even disclosed in the financial statement itself. Liquidity crunch, short-term liquidity issues, even long-term liquidity issues. All these things were very evident even from the financial statement and other details which is available in the audit file. But still all these indicators were ignored and the going concern issue was not properly addressed. Then risk assessment I mentioned initially, there were absolutely virtually no risk assessment at all. Risk assessment, planning risk assessment and understanding the entity and the all those aspects of the audit, to my understanding, it consumes almost 50% of your time. A proper risk assessment, a proper planning, and then a proper strategy. proper control evaluation, all these things will take at least good amount of time. In this case, we have seen one or two work papers where some risk, and many of those work papers says examples of risk. It is not actual risk which is available in the company. Not even any assessment of risk at financial statement level or assertion level, not even identification of significant account balances. So it is basically a rudimentary work. Then consideration of laws and regulations. Laws and regulations this is a company regulated by NHB, National Housing Bank. The company was violating a lot of requirements, especially capital adequacy requirements, and there are a lot of other violations which is pointed out by the regulator. Once you have an indication that there are some apparent violations of the applicable laws, again SA 250 gives you the procedures which is expected to do. None of these procedures were seen documented in the audit file. Now this is another case where we find some other interesting findings. Again, this is between joint auditors. Earlier we talked about the component and group auditors. This is coordination between two joint auditors. There were two joint auditors. One joint auditor resigned after filing a report under 143.12. But before filing that report, during the time of that joint audit, they issued a series of communications to the other auditor, giving their observations, significant observations about certain transactions which are in the nature of suspected fraud. But until the resignation of the auditor, the continuing auditor did not do any work on that one. And this is totally against SA 299, which says when significant information is available to you from the other auditor, you need to either agree or disagree with that observations after doing your procedures. This was absent. Then there is a self-review, which is happening in this particular case. Self-review in the sense, the auditor himself prepared some information which came in the financial statement in the form of a significant material disclosure. Then he audited the same financial statement and issued an audit opinion drawing attention to this particular disclosure in the form of an EOM. So this is also explained in very detail in that order. Again, this is another case where the previous auditor is resigned and a new auditor is appointed for the casual vacancy. But the new auditor started his work without even completing his communication with the previous auditor, which is a common thing which we find in many cases. We issue communications, but we will not wait for receiving the reply back. We need to wait a reasonable time, which is very clearly given in our Code of Ethics. Now, another issue, which is again a common issue which we find in many of the cases, is the inadequate verification of expected credit loss. Basically, in any company where the expected credit loss is significant and material, there should be a ECL model available, and it is the auditor's job to review that model first. That is the basic thing. So nothing of that sort was present in this case. Then the resigning auditor also flagged certain loans, which is fraud risk, significant fraud risk. But when you see the work of the incoming auditor, there was no risk assessment, proper risk assessment by the incoming auditor. Evergreening of loan is again another issue which we see in companies where operate through a lot of layers and group companies. Here also evergreening of loan happen. One company is sanctioning loan to another company, that company is sanctioning loan to another company. The other company repay the loan to the original company. So this kind of things were happening in these companies also. But there was no adequate provisioning for any of these loans. This one?
Similar case here.
Yeah. So here, I think you can take it.
Yeah. So this is also a sort of a same group company, similar sort of a case earlier. No, this I think we are talking about the new case, right? Yeah. So this one, there are next two slides. I'll tell you, this is a case where there was a group parent company where substantial operations were all there in subsidiary companies, and there were quite many unlisted subsidiaries also, and there are about 6 or 7 companies through which from the main company the funds were facilitated or transferred out to the promoter or promoter controlled entities. Here one of the thing was the auditors of subsidiaries also, when they look at the loans etc. are given, they should actually look at what is the business rationale for these kind of loans which are given. Many times auditors, we feel that our job is not to ask the questions to the management whatever it does. No, if you read SA 240 as well as 315, you need to find out or look at, are there unusual transactions? How do you identify unusual transactions if you don't ask a question on what is the business rationale? So here was a case where there was advances were given for a purchase of raw material which were significantly higher than what were the previous transactions there. And one another very aspect which should have raised the auditor's professional skepticism was, in the bank reconciliation statements you see entries for the checks issued but which are not encashed before the year end, and there was an indication of the transactions from the files which you see that the intention was not to actually encash them before the financial year. The scheme was basically to change the color of the outstanding balance from either from a related party borrowing or related advance to the bank balances. If how many of you have seen the Supreme Court order of 1968 on ICA versus PK Mukherjee case? No? It's a just 8-page order, very interesting, read it. There also in the Calcutta Anand Bazar Patrika, famous media house, it had an employee provident fund trust, and the provident fund trust had given a loan to this main company, Anand Bazar Patrika, and Anand Bazar Patrika issued the checks telling them don't encash them before 31st March. But the entries were passed, the related party loan was squared off, the money was shown as a bank balances. Similar kind of a thing one can see this in these cases also happening. So there the Supreme Court also quoted what the chairpersons and others had talked about, Kingston Cotton Mill etc. They quoted exactly the sentences saying that if there is something arises suspicions in the mind of auditor, he should probe it to the bottom, and the auditor was punished. So we could see the similar thing. And plus, yes, when another area is when you issue the internal control financial reporting report, we need to do a thorough audit and then document it. Without doing that, without checking the control etc., issuing the report is issuing a report, false report. That's the standard. So don't ignore that. And of course, the various risk assessment, 315 compliance etc. were completely missing. And there was also an issue in one of these entities of the independence, because the auditor or the audit firms, related firms, were found to be doing lot of non-auditor services which will actually render the independence of the auditors ineffective actually. That was also another finding which you found. Go to the next. Yeah, this is the same one which similar kind of a thing which I explained earlier. This changing the balances, nature of balances by passing the entries for checks before the year end and really not encashing those checks. And go to the next one. Yeah, next slide. So now, based on these couple of studies, of course, one good thing is, if you notice, although our orders are just 76, these pertain to auditors across India, different parts of India. His orders, 250 orders on DHFL, etc. You see even the auditors in Bhubaneswar, here, there, all the places. So, and another interesting feature I want to tell you is, these disciplinary reports relate to all types of the firms, different sizes of the firm, not necessarily either the small firms or the big four firms. So it is in a way gives an indication that we need to do something about the improving the quality. And a couple of things, learnings which I want to mention is in next 2-3 minutes. One is in India, independent audit has 3 components: issuing audit report using the standards on the true and fair view, and the next 2, don't ignore it. Many of us ignore it. That is why question comes, if there is a disclaimer of opinion, why the auditor is getting punished? That's where this number 2 and 3 come in. Most importantly, CARO audit, and if there is any suspected fraud, reporting under 143(12). Very, very important obligation. Yes, many of us say that this is a unique obligation in India, but in South Africa also similar obligation exists. And the other one is concept of auditing has changed. Many of us are used to balance sheet audit of the bank branches going on 31st March, getting appointment letter on 30th March, by 4th April audit is over. That doesn't, the standards do not prescribe that. You need to do a thorough internal control testing throughout the period of the audit. So the risk-based audit concept is there, and then reasonable assurance word used is not a very casually, don't take it. You need to, statistical terms, 95% of a confidence level. So you need to design your test of control, substantive test, and other things to achieve that objective. And the other one is standards on auditing, whether the standards on auditing or the financial reporting standard, they're all part of law. And now it is, they also use the mandatory word shall. Okay, it is no longer the earlier what we used to talk that the auditing standards and others are just a guidance to the auditors. That thing has gone long back. In 1999, when the accounting standard became part of the law, they became mandatory responsibility to comply with. Go to the next slide. And documentation requirement, just one sentence, 230, please read it. Create a documentation in such a way that even if you are not present, somebody else should be able to understand that what audit work you have done. Have you done this in compliance with the standards on auditing or that? That is a additional responsibility. And critical assessment and professional skepticism, very, very critical. And if you see all our orders, you will see that you yourself feel that auditor should have actually used his professional skepticism. And independence and objectivity, providing non-audit services, taxation services, etc. Be careful that it does not affect your audit objectivity. And continuous learning, very, very important. Keep reading what are the standards, issue new amendments happening, and we can't afford to say that somebody else should actually come and keep telling us that this is the new standard has happened. So continuous learning is very, very important, especially on the auditing standards level. I would say that more and more reading of the standards of auditing is very much required. So this is these are a couple of things, learnings I would say from our perspective. So that's all we wanted to say. Thank you, audience.
Thank you, Arun Kumar and Vidyadhar Kulkarni sir, for this wonderful presentation. Learning is a continuous process, and it's a continuous tense as well before we turn learned. And I'm sure the objective is, learned is only not an objective reality, but it's a journey towards there. Members will have a short break of 10 minutes. The tea is served to the right side of this hall. We will assemble back for the panel discussion and the question and answer session after this tea break. Thank you. And CA Ramadhyani, partner BK Ramadhyani and Co. and Ajay Bhushan Pandey to come out to the dais to start the session. CA Mohan R. Lavi is a qualified chartered accountant from the year 1989. He has over 27 years of experience in industry across a variety of industry, having worked in senior positions in finance, in manufacturing and software companies. Mohan has over 8 years of experience in practice. At present, he is a partner of KP Rao and Co. Chartered Accountants, Bangalore, and heads the financial reporting. Mohan is also the author of the book on IFRS, Ind AS, Key Audit Matters, and Sarbanes-Oxley's Audit Act. His article appears frequently in Hindu Business Line, Deccan Herald, and Bombay Chartered Accountants Journal. He is a regular speaker at various forums on financial reporting. May I request C. Abhilasha to welcome him. CA Sham Ramadhyani is a qualified chartered accountant and also a CMA. He is a rank holder throughout his intermediate as well as finals. He is a senior partner of the firm BK Ramadhyani and Co. We have CA Ravi Anantramaya, who is a finance professional with over 30 years of experience in various facets of finance function. He is a member of Institute of Chartered Accountants of India and Institute of Cost and Works Accountant. He is presently leading controllership function at Wipro Enterprises as its vice president and group controller. Ravi is also a frequent speaker at forums such as CFO India, Institute of Internal Auditors and other professional bodies. Request CA Siddharth Javli to welcome him. We'll quickly move on to the panel discussion.
Thanks, Pramod. Thank you. So we've got 45 minutes?
Yes, sir.
45 minutes, okay. So what I'll do is I'll cut down the icebreaker questions. We had a couple of icebreaker questions for sir, but we'll cut it down. I'll get straight into the topic which Dr. Pandey raised, and I think which is a lot of discussion is happening on that. Sir, the ISA 600, which the revised draft which has come out from the NFRA, that is out for public comments. I understand it's there at the end of the month. But I think what is of concern here is, and for what we need a little bit more clarity is on the October 3rd circular on the existing SA 600, which has come out. And it would appear to us that if you look at the circular, it is almost saying that the revised SA 600 is applicable even as, even before the revised one is actually notified by the MCA. I think a lot of practicing professionals today are having an issue about what exactly that circular sort of, implies for both the statutory as well as the joint auditor, component as well as the group auditor. Do they have to follow it immediately? Because a lot of questions have been coming up. Should I do it because it came on October 3rd? Should I do it for the September audits? Do I wait till December? So I think those questions are coming up. So a little bit of clarity on that, sir, if you don't mind for starting.
See, in fact, this circular that we have issued, you must have noticed that we were very clear while we were issuing the circular that we are not trying to put any additional obligations. Basically, we were interpreting and also reiterating what these provisions, the existing SA 600s are. Right? Now, the only thing that we were finding, and particularly in many of the proceedings that we had conducted, I had also mentioned during my talk in the morning, also some of the things also came up in the presentation given by Arun Kumar and Vidyadhar Kulkarni ji, that many cases some kind of a reliance used to be placed on the work done by the component auditor. Also in some cases saying that we did not assess the work done by the component auditor. We did not get to access the papers. We thought that we must clarify this, that what is the provision in the law. And in that sense, we have issued this. The question here is that good enough replacement for the draft that we have published? The answer is that obviously no, because that is the SA 600 current interpretation of the current one. But if you look at the ISA 600, that goes beyond that, in the sense that that will provide more clarity. So what we thought, that as on today, when the ISA 600 is still not become the part of the standard, because that will take some time. First of all, the comments, public comments have to come. Then on that, the NFRA will deliberate on this. It will go to the Ministry of Corporate Affairs, central government, and then thereafter it will be notified. And whenever any standards are notified, the certain time is given, from a particular date, because they are a new obligation. But so far as this particular thing is concerned, it is not a new obligation, it is the existing one. But then, I do hear the concern saying that, even if it is not a new obligation, how does it impact the current one? So see, my answer again, I will have a disclaimer here that, only, I'm not saying as an NFRA authoritative chairman, because I don't know what my NFRA as a board, what the view will take. But I always feel that, if you are reasonable, my point is this, because, last week I was in SOCHAM meeting, and there this question was asked, saying that, look, the first quarter has been over, now in the second quarter, so what do we do? Do we restate? I said that, look, it's very difficult for me to answer, right? Because the moment if I say that, that will mean that, my circular is not a reiteration of the existing one. We are giving the clarification. So my point is that, be reasonable, and then, you can also expect NFRA also to be reasonable, as and when that, if any matter comes there. So beyond that, for me to say anything else, saying that, it will be applicable from 1st of January or 2025 or something, that wouldn't be fair on my part to say that, particularly when in my circular itself we have said that it is the reiteration of the existing provisions and interpretation of the existing provisions. My only thing is that, whenever you interpret any circular or, any provision of law for that matter, or any standard, make a reasonable interpretation, right? And do the best effort basis, right? In the sense that if one is able to show that, yes, this circular has come, and then, now, we are doing it. Earlier, maybe, if he was not doing it under some impression, but at least if now one is doing it, then in that particular case, he will definitely have a case saying that, look, the due diligence part, I have executed well, right? So this is something which, that will be the point in his favor. If ever any question is raised that, why you didn't do it earlier, right? So in that sense, that becomes very, very important.
Thank you, sir. Shyam, sir. Go ahead, sir.
So again, my questions are again regarding SS 600, but at the outset I would like to clarify that I'm not against the new SS 600 or the circular that we have been issued, but then there could be some issues which are emanating because the understanding of the profession all these days was different from what the stand that NFRA has taken. And so now we need to apply this circular now as quickly as possible and in the best manner possible, like you mentioned. Now we know that there are several, first question is that there are several companies in India which have got even up to 200 subsidiaries or 200 components ranging from 50 to 200, some of the large entities have. I really don't know whether even the big four have the bandwidth to do all this within the prescribed time. Maybe I'll stand corrected if they claim that they have the bandwidth, but nevertheless for somebody to do 50 large, and many of these large companies, they're not shell companies like perhaps an SPV of a real estate company where they only hold a property which can develop later on. Most of the entities are likely to be active right now. And my colleague was also telling me that Wipro has got some, how many? 100 active subsidiaries. So in this case, given the time frames that we have, is it going to be possible for, and the company has already appointed component auditors. So is it going to be possible for the statutory auditors within their compressed time to do to go through all this is my first question. The second one is that I'm sure this is not the intended reason, but then the unintended consequence of this would be that this would be a threat to a large number of small and medium-sized auditors. Today, nobody wants two sets of auditors, one the component auditor and second the consolidating auditor. And so it is quite likely that the consolidating auditor would take over now, from now onwards the job of ensuring that they audit the accounts as subsidiary, at least of all the major subsidiaries. So this is going to throw a lot of challenges to the smaller firms and perhaps lead to more concentration of audits in the big four or the big six. I think the government has exercised some amount of concern that there's too much of concentration in them. And people around the world are trying to break up very, very large companies. But here in India, this measure, though unintended, perhaps it's an unintended consequence, is that it's going to lead to complete concentration of audits in the big four or the big six, and then to the complete elimination of the smaller entities. This is the second issue. Yeah. The third one is that, again, I'm just adding up all the questions of SA 600. The new SA 600 draft says that it shall not apply to public sector banks, public sector undertakings, and public sector insurance companies. But obviously, that clarification is not there with the current circular. So even in the case of, let's say, a bank like State Bank of India, the consolidating auditor might have to go through 5,000 branches. In some form or the other, he'll have to do his diligence. So there are going to be practical difficulties in implementation of this completely. So just wanted to have views of how to strike a balance between following the international standards as well as addressing some of these issues which have been present historically in India. Thank you.
You know, the issue of having too many subsidiaries in because we have seen in some of our cases also that it's a very famous case where the SEBI also has passed a very heavy penalty, 25 crores on each of the directors and then the senior management. And we also have passed some orders on their auditors. Do you know how many subsidiaries they have? More than 300. And if you look at the SEBI orders, the way the money was being diverted from all this, I mean, it will, it is in real sense mind-boggling. Right? The question here is, I'm not saying that, subsidiaries are not needed or every set of subsidiaries is done only for the routing the money, in a different for a different purpose. But sometimes that answer we will have to find out. That a large company phenomena is not only an Indian phenomena, right? If let us say, for example, let's take the example of software company, Wipro for example. Wipro may be having 100, but then how many companies, subsidiaries your international peers have? How do they handle that problem, right? They are, in terms of a market cap, if you look at the world, for example, Apple, Google, or the Microsoft, they have subsidiary for each of the countries. Plus, they may be having many subsidiaries within the US itself, right? And then, so all the international companies, they are able to handle the problem of SA 600 and also these auditors, right? How do they handle this? So therefore, when again, coming back to the same issue that I was mentioning, when we are saying that we are going to become a global power, third largest, and then if you are going to have the very large size companies, and which will have, from their business logic wise, may have, some X number of subsidiaries, then those will have to be handled, right? It is like, somebody saying that, look, I will have you know, 500 subsidiaries, and because I have a 500 subsidiaries, therefore I cannot, it is difficult for me to follow SA 600. Is that logic correct?
I didn't mean to say that.
No, I'm not just saying, I'm saying that, in some cases, is that logic correct? So therefore what I'm saying is, if certain number of, subsidiaries are there for the business logic, then in that, then that company and then the auditors of the component and then the group auditor, they have to handle this. And when they are handling this, as I said in the beginning, in my earlier talk, that we have experience of working of SA 600 across the world for 15 years, right? So, I would be very interested that, look, for example, Wipro finds out that how it's owned the, the peers across the different parts of the world. For example, who would be the peers of, non-Indian peers of Wipro? I mean, you would know better, right? So you find out that, look, because for any US job, when you compete, you must be competing with, 5 other, apart from not your Indian peers. How have they organized their business? How many subsidiaries they have? And to that extent, so in fact, I will be, I'll be eager to listen to, or maybe, in due course of time, some kind of a, study saying that, how this can be done. So that is one part. So therefore, now coming back to this audit concentration part. See, when we are looking at the statutory audit work, it is very essential part of the corporate governance. And that is the place where the interest of the investors, interest of public is paramount. Right. And interest of the public is paramount. And there, if so, and so accordingly, we will have to, change the method of our own working, and to ensure that their interest is protected, and interest of the shareholders, interest of the other stakeholders is there. Can we have that? Can we have that argument? As we have seen in many other sectors, and we have seen in the past, for example, whenever any new change is brought in, like, when the bank computerization, we heard that, when that was being brought, they said that, the computerization, what will happen to the people who are employed in the banks, right? Those fears were expressed. Similarly, whenever any large digitization exercise is done, for example, in income tax, we face this. We said that, it will be like a faceless assessment. We will have this, they say, what will happen to our promotion then? How will the income tax officer become income tax commissioner, right? So that time, my answer is to be that, look, we are all there to serve the public interest. So that should be the paramount. And then within that, we have to find a solution, right? We have to find a solution, and that is where, we have to, during the tea break, I was discussing with some youngsters. They were saying that, that how do we ensure that the smaller chartered accountancy firms, they get their job and not the big ones? How do we create the larger ones? So then one of the things that was there, that can we have, if supposing somebody suggests that, let's have a quota system, right? Quota system, but then would the quota system work? Is that a most desirable system? I can see some head nodding saying no, right? I mean, we can't say that, this size can be given only by this. So what is the other way around? Now again, if you look around the world and in our own country, and I gave an example there, that about 40 years back, 50 years back, there were few multinational IT companies. How did, the companies like, a startup company like Infosys, Wipro, right? Wipro was what, earlier vegetable oil company or something like that? Right, daldas, right? And, we grew up, eating daldas because, the ghees were very costly, right? Right, I mean, at least youngsters wouldn't know, but then, we grew up eating daldas, right? And then, all of a sudden we found that, Wipro has become, the IT companies, right? So how did this happen, right? I mean, and then, when I look at this, then I was introspecting. I say, look, what is the difference? We have a 5-6 lakhs chartered accountants, very, very smart, talented. It is very, very difficult to qualify and complete that chartered accountancy, the entire program. Extremely difficult. Requires a lot of commitment, requires a lot of intelligence. It's almost, I would say, because I have also studied in IIT, I say it's almost like an IIT, right? Ultimately, when you go through this. Then, how does it, why the system is such that the system is not able to give a lot of opportunity to these youngster ones? And one thing that I have observed, which actually differentiates this profession from the other professions. Every other profession, you have a graded qualification. Like a doctor, you have MBBS, but then, you have MD, then you have a super specialization, somebody is a neurosurgeon, somebody is a cardiac, and then specialization goes on increasing, right? And then, so therefore, what happens is that is what it starts distinguishing. If you look at, many of these IT companies, they employ the graduates, the BTechs from the various, then they also have, some very senior PhD in computer science, masters in computer science. That is the kind of, and that's how, they deliver the capabilities. And they are able to compete in the world. Here what has happened? Here what has happened that, a basic CA degree, and we have said that, a CA degree is good enough for doing any kind of audit. Right. So naturally, the investors on the other side, they are not able to get convinced, saying that, look, if you are a CA, individual CA, small company, my company is a multi-billion-dollar company. Will he be able to do a job? And that is why I was told that, some of the investors, they insist the companies to hire one of the big fours, right? So what I am saying is that supposing if we have a graded system of qualification, and graded system of qualification saying that, look, we have some basic, some small size companies audit, can be done. But if you have a higher ones, then, you require some higher qualifications and so and so. So if you can have, this kind of a hierarchy driven pools, just like, the medicine or engineering or in any other sector, I think, that will actually inspire the confidence, and then, the 5 or 10 youngsters will come. And then they will come and they will say that, look, we all are qualified. We all are qualified, and then, we can take up a job of maybe, the Wipro. We can get the Wipro audited, right? I mean, let's say, if the 10 people, if they come, and then he will be very happy to at least informally recommend to their management, saying that, these are the people who are there. So I think, we have to look at this problem rather than saying that. Now look at what is, why did we have to issue a circular? What circular says that you will not, you will evaluate the work of the other component auditor only if he is not a CA. Now imagine. Can that be, is that logical, right? In the sense that, let's say, if a big, the big company, whose most of the operations are done through the subsidiary, and subsidiary is very, very complicated, and just because it has been audited by, one CA, right? And then, the main holding company, which is a listed company, that auditor says, I have relied upon this and I cannot access his work paper and I cannot assess his professional work. Do you think this is logical, right? How will it, and then in that situation, then, what would the investors do? Investors will say that, look, I need some higher there. So I think, we all need to introspect. I don't have a very ready solutions to this problem. But then, because these problems, I'm glad that this problem is being discussed. And I am very sure, based on my past experience, that some of the bright solutions will come not from me, not from him. From the discussions like this, some of the youngsters you will be able to, and my only humble request would be that look around, that why in the other professions the people are able to, like for example, the doctor, for example, who is one of the famous doctor here based in Bangalore, Devi Setti. He has what is this Narayan Hrudale, right? Then similarly, who was in Scots, very famous doctor in Delhi, now Dr. Trehan, right? So the global, right? The Medanta, right? So what has happened? These are the people, who thought that, let us, collect some, the qualified set of doctors and do this, and then accordingly. So what happens is that, supposing as a patient, if I have to go, I will go and see that, look, Dr. Trehan or Devi Setti, what kind of doctors, how qualified they are. If I have a problem, it is only an MBBS doctor or some, the very, very qualified doctor. But here, supposing, if you have a small firms, which has got no such distinguishing factor, then, how would you compete with the, the bigger ones in the world? So let's say, if a small firm, if you have a system of qualification, and where, some higher qualifications, and then, you say, this is the small firm, though we are small, but we have a very, very qualified people, right? And these qualified people, so that, you will be able to undertake the job of, the larger audit job of the larger firms, the larger companies. So towards this, I was mentioning during the tea break, that with the Indian Institute of Corporate Affairs, I am also currently the DG of, CEO of Indian Institute of Corporate Affairs. So NFRA and Indian Institute of Corporate Affairs, we have signed an MOU. And to start with, we'll be launching few courses. On one side, for those who aspire to become independent directors, those who aspire to become, or those who are already in the audit committee, as well as those professionals, CAs, who want to audit public, the listed companies. So we will have some kind of a courses, and we will try to, and those courses, in fact, I have requested Kulkarni, and then, he may have also, yes, right, webinar. So the webinar, and then some discussions and some training program. Those training program will come with some, of course, some content, including some practical experience, on-the-job training. Just like a doctor, when he does MD, he doesn't only attend to the lectures, right? He actually works in a large hospital, right? And there, he gets an MD degree. If he is doing some, super specialization in neurosurgery, he doesn't only attend to the lecture and pass examinations. He actually goes and works there. So we will create a system like this, and let us see how it goes. Then, that alone will not solve the problem, but at least it will be a step in that direction. But the rest of the things, I think some of you were saying there are some problem with the advertising guidelines. Some of the problems are in the networking guidelines. I have not yet gone into this. I don't know whether that will be under my remit or not, because I'm very careful that, if let us say some other institutions have been assigned with that task. But wherever you feel as a profession that, as an NFRA, we need to, contribute or help in this direction. And if you find that certain conditions are restrictive, certain conditions are stifling you, and they are not allowing you to grow, just like, the startups in the other domains have done, please let us know. We will be open to discussion, and we will try and see that how, our young chartered accountants, the professionals, they, bloom just like, these startups in the other fields have done.
Thank you, sir. Thank you, sir. Thank you.
Interesting thought.
Thank you very much, sir. That was really interesting. I only hope that this additional higher qualification also is given by NFRA only, so all of us can register for that.
That is, in fact, that certification course is that, NFRA, IICA, right? I mean, because see, the IICA or ICAI, I mean, don't confuse with that, right? But tomorrow, if the ICI also comes, and, because, I was talking to, Ranjit Agrawal, he's a very nice person. So he said कि सर ऐसा करते हैं कि वो हम लोग भी मिल करके एक कोर्स लॉन्च करेंगे ऐसे कि करना चाहिए चलिए हम लोग करते हैं मिल करके कि some higher qualification I mean we should start doing this. So more the merrier, we are also trying to rope in some IIMs. So NFRA along with some IIM or Indian School of Business, we are talking to various other institutions saying that can we join hand together to create a higher level of qualifications for the chartered accountants and auditors, so that I mean, they can also say that, look, I have a basic degree just like MD, but then I am also certified so-and-so, right? Like in the law, for example, you have LLM, right? You have, further degrees. So I think, that is something which will help you distinguish from, saying that, yes, you are the auditing. Otherwise, today, Mr. Kulkarni, and in fact, you all will be knowing that today in the basic accounting, basic CA course, maybe, you take few subjects as an auditing. Like, just like, when I was doing electrical engineering in IIT Kanpur, I did something, one course on computer science. But could I have become a computer science? No. Then after 14 years of service in IAS, I thought that, no, I need to understand more about the computer science. So I took study leave, went to US, spent 2 years and did my master's in computer science. Then I said that, this is not good enough. I haven't learned enough. So I said, I will take a PhD in computer science. So I did PhD in computer science. And then, how that was useful, because, when I was, when I joined Aadhaar program with Nandan Nilekani, then I could understand that, what all could be done, right? And the same thing, all these, when I was talking about the annual information statement, faceless, all my knowledge of computer science came handy. So similarly here, so some amount of, some, additional qualification, additional training will actually distinguish you.
Sure. Thank you, sir. Thank you very much. Ravi, you've been very quiet, so I can't not involve you in this now. So 100 subsidiaries, maybe 50 auditors, global operations. Your thoughts on, I think we've been discussing a lot about this, so it's early days yet, but what do you think has been the reaction to the circular, the SA 600, and more importantly, coming from a corporate point of view, how do you think this will be implemented? How will it pan out? And Ravi has been working with the SEC and multiple auditors. He's in Bangalore only when we call him for a meeting like this. Otherwise, he's never in Bangalore. He's always traveling the world, meeting auditors probably, right? So what do you think, Ravi? What do you think? How does it pan out?
Thanks. My plight is just like a patient amidst the expert doctors and surgeons discussing what surgical procedure that need to be performed on the patient. So I think just the normal disclaimer, what I say doesn't represent of Wipro's views, but just want to mention one point. I think Dr. Pandey mentioned that why can't there be a the scaling ability of the Indian firms. There is an organization called Ethisphere. It rates 100 plus global organization as most ethical organization. I think this is the Karnataka State Chartered Accountants Association. I think we should be proud here that that Wipro has been in that top 100 most ethical companies for last 10 years. Bangalore. So, and probably I think I will just address one point, because Wipro came in all the three of you are talking. So probably one thing I'll just clarify. I think the subsidiaries are primarily are having operations or having investments. Otherwise, there is no need for a subsidiary. My job is to kill the subsidiary if it's not required. My job is to kill the bank account, it is not there. That's the mandate from the audit committee to me. And in many places, sir, globally, in US and in Canada or in other places, audit is not mandatory. But my audit committee tells me that there should not be a single entity which is not covered by audit. So that's the governance requirement. And only then, you will be able to face, these kind of, this SA 600, I really, was, frankly speaking, I started getting into it only after this thing started, because for us, we are getting everything audited, with the international auditor, because I am part of non-IT part of Wipro, which is growing, and where, we don't need to have in many places mandatory audits, but we have audits by, the people who actually to perform all this management package, reporting packages that happens there, audit work papers are shared, all those things. And coming back to Mohani, your question, I think from the point of view of regulators and also the probably the clients as well as the standard setting boards, I just wanted to just narrate one incident which really affected most of us who were practicing US GAAP. This was generally US GAAP means people start from Enron and then Sarbanes-Oxley. I'm just taking probably 4 years before 1999, where I think till then SEC, which is the regulator, was actually pushing FASB to come up with a standard for revenue recognition. And typically, as it would be, FASB was taking probably 4, 5, 6 years, to just to come up, because they were more accounting profession related matters. They wanted to be perfect on that. But being a regulator, you don't have time. I think you could see the way in which Dr. Pandey was addressing 47 billion or trillion or 55 trillion or 27 trillion, whatever number we are going to get there. So you don't have, you need to act there. So SEC said that I really don't care. We guys can discuss till cows come home, but I will come up with the standard for revenue recognition, which is SAB 101, SAB 101. Boom, that comes in. So next, probably a decade or more, when we were practicing US GAAP, revenue recognition is not from an accounting standard, from an approved accounting body, which is FASB, but SAB 101, which was issued by the regulator directly. And this, and then after, of course, after that, there was some tinkering that happened by the way of, EITF, which is the Emerging Issues Task Force, that is there, part of the FASB. They slightly clarified those things in the subsequent thing. Not that it helped, it made our life more miserable, but nevertheless, I think those things happened. Even last 7, 8 years ago, crypto, the accounting for crypto, again, FASB took a long time, whereas, in fact, SEC, there was investor, protection advisory committee, which said that we should have our own, accounting body, because this FASB is taking a long time. Finally, after so many years of deliberation, crypto-related standard came into place just last year. Whereas by then, a lot of water had flown. I think a lot of things had happened in the crypto world. So just thought of bringing in this, perspective, of how it is happening. This different view and the thought process of a regulator would be, action biased, impact biased, and there is some, ecosystem that need to really move on with something. But the approach and the perspective of probably, a body which does the accounting is probably the accounting profession take the perfect kind of a view there, because they are slightly more puritans. That takes a longer time. So these differing views, it's not new. Probably in India we are seeing it as new. It has happened, always, throughout, the world there. So I think we are going through this particular motion as it was discussed by, we need to completely engage ourselves, with everyone, and then just, chug along, with this path. That's how I view it.
Thanks, Ravi. Thank you. 10 minutes? I always we should give them at least 20 minutes for questions, right, for the audience, right? Okay, sir, I think one area wherein I think we have a little bit of a concern is that, including recent orders which have been passed, Vidyadhar sort of alluded to it in his presentation and said why was that actually mentioned. The auditor has given a disclaimer in his audit report because of, we don't get into the details of the client or the name or whatever it may be. And I think what he was trying to probably say is that I've done my job. I've given a disclaimer. As per SA 700, I can't go beyond a disclaimer. But I think if you look at the order which has been passed, they've still said that there was still some transaction which happened there which was not noticed. 143 should have been invoked. We should have sort of, informed the central government of the fact that there was a fraud and all those things. I think this again goes back to the circular on fraud, which also was issued by NFRA some time back. I think the concern from the community here auditing for Finitary is that is even issuing a disclaimer not sufficient in this particular case? Should I go beyond that and actually report it? We don't understand. If there is a fraud notice, we have to report it. But in a non-fraud case, would a disclaimer be sufficient, or do you think that we still have to go beyond? I think that's the question, sir.
So again, it is not fair on my part to talk about a particular case, but generally about the disclaimer part. what we many times see is that, I mean, it's a very interesting little bit of diversion, that there was one case where the number of qualifications or the emphasis of matters, where I think, maybe 25, 30. Yes, full of emphasis of matter, qualifications, right? And finally it says that subject to this, it is true and fair. Right? So in the hearing, I asked the CA that, have you seen that Sholay film? Sholay film. Sholay, you remember, the Amitabh Bachchan talking to Hema Malini's Mausi and describing the qualities about Dharmendra. Right? कि वो शराब भी पीता है, जुआ भी खेलता है, लेकिन लड़का बड़ा अच्छा है. Right? So I think it is very, very important for you when you do this audit. Because, because you feel that yes, that I have given this qualification, I have done this, and right. So I found that example. So I have right. So it's like a Sholay film, right? I don't know how many of you, because I see many younger ones, who may not have seen that Sholay film. So I think, Ram Gopal Verma will have to come with a new film to, educate the, the younger generation, right? But our generations, we have seen, right. Our generation have seen that film, right? Right. So, but then, the disclaimer is little different. Disclaimer is more serious, right? But, in some cases, I find that what happens is that he gives a disclaimer on a very small thing, that, I asked for this information and then I didn't get it. And therefore, I disclaim. But then there are some very, very, the matters, the company may have constituted some kind of a independent investigating agencies, and they have come up with a clear-cut case of a fraud or something. And then, but then this was not reported, right? So what we have to see, the intent of, the Companies Act, which requires an auditor to report fraud. Because the Company Act says that, the auditor has to give us a report of true and fair. So that is one requirement. But this is an additional requirement which says that, fraud has to be separately reported, and ADT 4, it has to be filed. Why it is so? Because let us say that supposing if, let us say, the disclaimer is given so that at least, so what do the people come to know, the users of the financial statement? They come to know, saying that, look, of course, their statement, the financial statement is not reliable because the auditor has disclaimed. But what happens to that fraud aspect, the siphoning of money, the money that was taken away? How does the laws get set into that motion? Where is the compliance of that particular thing? Because if the legislature has brought in this provision as an additional requirement, then can that additional requirement be dispensed with by, giving a disclaimer on some matter saying that, he didn't give me. Like, for example, in some cases that, there are a lot of trade receivable, a lot of, transactions, money had gone, money was to come from abroad. The money, and I was not able to get details, and therefore I give a disclaimer. But then there were clear evidences that the money was money was taken out from the country and so, and then this particular aspect. Because what happens is that later on they will say that the management will say that, yes, we provided all the information, but then this auditor played very, very, saying that, and still he has given a disclaimer. So it will try to divert the main issue to something else. Like, auditor versus the management, and they will try to paint this picture as a issue about the documentation, that, what information we gave and not gave. But then the real issue gets, sidelined. And that was not the purpose of this. So ordinarily, we will not do this, as I said. Ordinarily, no regulator should say that if disclaimer, even after you have given, still, we will try to find fault. But where there are clear-cut indication of a significant fraud, I am not saying that, small money going here and there, that is, anyway, it's a good thing that, materiality is always, very, very important there. But supposing if there is a significant fraud, but then what happens, another thing, now that we are talking of fraud, I must share my experiences. What happens, just like, the Sole film, similarly, supposing, let us say that there are suspicions. Law says that when you suspect a fraud, so there is a fraud, then either the management or somebody or the auditor will take a legal opinion, whether it is a fraud or not. Now the question here is that, you are almost acting like a judge, right? As if, you are going to convict him, right? What the law requires that, you have a reasonable suspicion, right? And that needs to be reported. But then, taking a legal opinion, and then, these days, legal opinions, I have nothing to say about it. But then, in any court, there are two different legal opinions. That is why, you have a judge, right? So you have a legal opinion, there could be a counter legal opinion. The two sides are always there. And then the judge takes a decision. So here, you can always get a legal opinion saying that it is not a fraud. And therefore, using such measures to, avoid responsibility, we all will have to introspect whether this is correct. The shareholders have placed a lot of faith on confidence on the statutory auditors, right? The shareholders have placed, and then, if we are trying to, act like a, Amitabh Bachchan in Sole, or, I'm not saying don't take legal opinion, but sometimes, if you have a legal, some genuine confusion, then, of course, you should take legal. But then, in order to avoid that responsibility of reporting fraud, if you are going to take a legal opinion, there was a case where one auditor, it was a case of, I think, joint auditor, if I recall correctly. There was a joint auditor, he resigned saying that this is a fraud. Then the other auditor comes in. He takes a legal opinion and counters the opinion of the outgoing auditor, saying that, it is not a fraud. And therefore, I will not report. And then, do you know how much was the scam size? 40,000 crores. Now, in such situation, what do you do? So this is something, and who suffered a loss of that 40,000 crores? It is, maybe you, I, everyone, right? Because, as I said, say 17 crore people are investing in the stock market, right? The demat account holders, right? They are investing. So maybe, your own family members and so on. So you wouldn't have realized that. So this is something which, we need to be very, very alive to this, saying that, why we are, we are not just trying to put out a technical thing that, you have disclaimer, why did you not do this? Only when we find that, there were clear evidence and also a very significant amount of fraud has happened, then why did he not report? Why did he choose the easy option of, finding something for saying that, I will disclaim and then I will not report. And skirt the main issue. Right. Thank you.
Pramod, one more quick question or we'll go to the audience. What do you say?
Sorry, my answers are longest.
No, it's okay, sir. Absolutely okay, sir.
Yeah, quickly, can
Shyam, sir, any last questions?
What is NFRA's views on SA 299 regarding joint auditors' responsibilities? Are we likely to see some similar circular for joint auditors' responsibility also, like what we have seen for principal auditor and component auditor?
Actually, I must say that we haven't applied so much mind on this yet, right? Because why I'm saying is that not many cases have come up where we find, except not exactly the joint auditor. In case of a branch auditor case which he has mentioned, that the main auditor is saying that it was the job of the branch auditor. The branch auditor says that I only did the branch and then this one. So this is. So again, another story, the famous story of Mullah Nasruddin. Mullah Nasruddin, right? I mean, supposing, 4 people were playing cards, the gambling, right? 4 people were playing gambling, and it was during the days of Badshah Akbar. And Mullah Nasruddin was caught playing cards, because that time, not like Diwali when we all play Tin Patti and so, it was banned at that time. So the police came and then arrested all 4 of them and produced before Badshah Akbar. So then one person said that, asked police that, did you see whether I was there? So he was caught red-handed. So he says, now what do you have to say? You were caught red-handed. He said, yes. If I was gambling, then I was gambling with whom? If I was gambling, then I was gambling with whom, right? And therefore he was also let off, right? So my main concern is, right, that any interpretation of any law, whether it is a SA 299 or SA 600, the basic objective which is there in the Companies Act is that, the auditors have to certify it is true and fair. If anything which impacts, we start seeing that, because of this, the demarcation and other things, then, even if, let's say, today it is permitted under the law, then tomorrow the lawmakers will be forced to think that, look, is this the right thing to do, right? Are we entering into the Mullah Nasruddin type of thing, right? That, nobody is taking the responsibility, right? I mean, you must have, another thing, that, that's famous, the Jessica Lal murder case, right? I mean, a film got made, no one killed Jessica, right? So this is another example. So, we shouldn't get into a situation where, it is very difficult to determine the accountability and the responsibility. Right. I mean, we shouldn't, create a situation where, so therefore, any standard that we follow, we have to be very, very particular, saying that, and that is where the main auditor's responsibility, and that is what, that is the, the philosophy behind SA 600. Saying that, the principal auditor, particularly of the public interest entities, the shareholders actually look at him, saying that, you have certified, right? Now, underlying, he says that I have relied upon X, Y, Z, and therefore, if supposing something has happened, then it is a case of no one killed Jessica, right? I mean, that is something which, to how long, this kind of a thing, the system will accept. This is something which we all need to introspect. Not NFRA. I mean, NFRA may come and go, but then question here is that each one of us here, we are professional, I am on the regulator side, but we are also, we also have a public interest, our own personal interest. We have our own money somewhere invested either in the bank or in some equity or our own family members and friends. How do we protect ourselves? So this is something which we all need to be concerned as a statutory auditor, because, and as I said, 5 lines of defense. When we say that, when we are saying that, as a statutory auditor, you should be concerned, then as a regulator, I am also 5th lines of defense. I also have to ensure that the system works, and then the system, works where somebody can be held accountable.
Thank you, sir. Thank you very much. I think, Pramod, we'll open it to the audience. Only request, I think we're running short of time, so please keep your questions as short as possible. Anil, I know you had 6 questions. Make it 3, please.
Yeah, keep the question short. Only one question per one person. Sir, the mic is there. We'll come from last benchers first. Anyone's there? Vishant, come front.
So it was an excellent presentation in the morning. You gave a very good insight about. Audible, no? Yeah, it was an excellent presentation in the morning. You gave a very good insight about NFRA and its functioning. My question is very simple. If you see last 15-20 days, there has been a news item of the conflict of interest between ICA and NFRA. It looks like as if ICA and NFRA are on a loggerhead. You also talk about a third largest economy and credibility of the country. Do you think these kind of news items and the loggerhead is good for the country, or where we are moving ahead? Is ICA is not competent, or is NFRA want to show an upper hand? I just want to know your view, sir.
Yeah, first of all, I wouldn't say no comments, but then what I always feel that, good thing about our country is that we are a democracy. And where, we discuss things and sometimes when we discuss, some people may perceive that we are the loggerheads. Actually, we are not at loggerhead. I mean, what I see, if the entire discussion that is taking place, that discussion is taking place in a public domain. I mean, for example, today what we are saying, some of the draft we have issued, and then some different views are being expressed. I always, as I said, even in my earlier jobs, I have been subjected to all kinds of criticism. And I gave you an example. Aadhaar, during that Aadhaar time, I was one of the most hated person. The GST also one of the most kind of a criticized person, if you can see at that time. But then ultimately, what I feel is that because, we are a very strong and vibrant democracy, the different institutions have viewpoints. And if that viewpoints are being expressed in some manner or the other, that is that should not be termed as something like a loggerhead or something. In fact, there could be a problem if everyone speaks into one voice, right? And so that is why it is very, very important that, that people must speak their mind. So therefore, I always welcome these discussions, and I take those discussions in a very, very right spirit. And then finally a good solution comes from such discussions. So therefore, I don't consider that, anyone is a loggerhead with anyone.
Next, we have the gentleman who is waiting.
Hello. Sir, I'm Tejas, chartered accountant. Okay. So, can listed company audits and public interest companies audit be split up in a manner like how nationalized banks audit is being allocated by RBI with some joint quota system or some system, and with a regulation saying that you give your work papers to everybody, even NFRA can have an access? That would help not the monopoly of the big four. Even if you see the latest report, big six are having the maximum monopoly of all the listed companies. This will help spread across all the entities as such. And you can have set the standards and you can verify whatever it requires.
See, I think that your question is, can some kind of a allocation be made? Some kind of a panel can be made.
Yeah, panel now, or an allocation with required setting standards.
I may have a little different view here. The question here is that, first of all, who will make the panel? Then, what will happen if supposing some problems are found with some of those in the panel and so on. So a lot of other problems can arise. So in such situation, it is always better that, again, in many cases, I say that, I am not the person, who is always, has a ready solution for everything. But I do look for, the best global practice. What is the best global practice? Because, if you say the best global practice, the globally, again, there are big firms, there are small firms. they, some amount of balance are being achieved. Globally, if you see, traditionally, historically, as I said in other domains, there were large multinational companies, but now, the startups are now coming up, and then they are making these large companies, kind of an irrelevant over the, over the period of few decades. In fact, there was a very interesting observations that many of these companies which were in the S&P 500 worldwide, let's say in 60s and 70s, almost 60 to 70% are not there today. They are all the new entrants. So all those new entrants were the small ones. So what we have to see and what we have to all together think, that how do we create, the good startup environment for the auditing and accounting profession here, right? And for that, what all things which are needed to do. For example, startups in other field, let's say in the IT or, the defense and various other sectors that you can see startups, they are being encouraged into certain matters. But somehow I find that in this, accounting and auditing profession, this is not kicking up, and maybe, some kind of an initiative, some kind of ideas will have to come up from ourselves. Those who are in the professions, as you as a profession, and we, and then the ICI as a regulator, we all have to collectively think. But then, having a shortcut, saying that create a panel, create a reservation, the kind of allocation, that is not a very sustainable problem. One of the suggestions which I just now mentioned, that, why not have some higher qualifications, right? Series of higher qualification, and then create a startup culture. Something of that kind, why we can't have that? So this is something which we should be doing it. Having a panel, according to me, actually is like almost like a band-aid, right? It is not a very lasting solution, and that wouldn't actually serve the purpose.
Yeah, we have the gentleman from last who wants to ask questions.
Hello, sir. My name is Sairam. So, in one of the examples, you quoted saying that with regard to income tax faceless assessment and things, you said ultimately public interest is what we have to serve, and there a public servant is involved. Do you, in your view, do you equate an auditor also as a public servant? What is your personal view on that? And if that is so, whether the compensation is paid by the company or it will be the government who will compensate that? Thank you so much.
So first of all, there should be no doubt that auditors are public servant. In the sense that not within the definition of the government side, that you will get your salary and then the dearness allowance and then in that sense, right? But then you are serving a public cause, right? And as I said, that this whole issue of public shareholders appointing statutory auditor, that came as a result of that McKesson and Robinson scam in 1920s and 1930s. So you are appointed by the public, you are supposed to be serving the public interest, and therefore that is how it is there. Now, so far as the compensation part is concerned, as I said in the morning, that what I find is my personal view, that in many cases I find that the compensation being given to the statutory auditors, particularly in the large listed companies, is much on the lower side than what is there in the the globally. For example, let's say a multinational company. Now, having a operation in India, it is a listed company in India. How much it pays to the statutory auditor here? But supposing if that company is listed in the New York Stock Exchange, then they have a statutory auditor there also. How much amount is paid there? So I think that is where, and then Mr. Patel, you mentioned that, about the remuneration, that, we are undercutting each other, right? So if we are undercutting each other, then, who do you expect from outside to intervene? So basically my suggestion is ki, have evolved some mechanism so that you don't undercut, right? You don't undercut each other. And that is where, the association or the ICI, they can come, they say that, all right, if the, I can't say any solution because tomorrow it will be in the newspaper. The NFRA says that, some limits should be provided. I wouldn't, give any solution, but then definitely, some solution can be found, right? Because if all of us agree here, tell me, who agrees here that, is there anyone who says that, the compensation is, at par with, the global standards? Because, I can't say that, follow global standards, but you will not be paid, as per the global standards. Then, I am not consistent. So I am consistent, my views are consistent on both sides. So that, if you are there, if you are a listed company, if you're, let us say, if you say that my market cap or the turnover is $5 billion, then a $5 billion company in US, how much he pays to the auditor? Then at least, you should be paying that much there. Is that is that unfair? But then, so that is how. So I think, it's good that, we are discussing this, openly.
We have a question here from.
I just.
We'll come back to you.
Oh, you want to connect the question? Okay. Yeah. So there's a difference between rules and standards. As a regulator, you can only make the rules, but it is the professionals who have to raise their standards and maintain the standards. So what we had as standards is nothing but a collation of the best practices selected by the regulators. So I welcome the circular of October 2024 because we did not read the lines of SA 600, old 600. We tried to read between the lines. That is one of the hallmarks of the Indian as per counterparts in other parts of the world. Now, one of the most interesting aspects, which is of SA 600, which is being legislated, or which is under thing, is the definition of component. The answer to Shyam Ramadhyani's question, how is the central auditor of SBI going to look into 5,000 branches? Sir, under the SA 600 which is going to come, the so-called branch audit which we are doing is not recognized. Because if it is a common software running the entire organization, you cannot audit at the branch level. That is, and it is ultimately the only standard is common sense. Even now also, the system of branch audit for banks requires to be reviewed. So that is why, sir, the second thing regarding your proposed SA 600, exclusion of public sector, banks. The fundamental principle of auditing standards is it applies to all entities, small or big. So nobody who formulates an auditing standard can say that this standard will not apply to banks, this standard will not apply to public sector entities. It is for the respective regulators to decide. So we would request the NFRA to do good work, to explain the standards to us, existing standards to us through various circulars, so that we also understand what is, we raise our standards to meet the existing standards before you move on to a new standard, sir.
Thank you. Thank you for your comments. I will just like to, I wouldn't, because you didn't ask any questions, so therefore I will be just a few comments. One is that, the general standards, general understanding about the standards. You see, prior to Companies Act 2013, You know, the standards, what was the legal status of the standards? So basically, it was the legal status of the standard was that there was standards issued by the institute, and they were expected to be followed. What 2013 Act did, if you talk about the section 143, they converted these standards as rules. Right, if you read that, it's like these are the standards. In fact, you know, some of the standards which are being issued, which will be issued, government will issue them as a rules. Right, they will say the auditing standard rules 2000 so and so, and 1, 2, 3, and then it will have a various chapters and so and so. So basically, and why it is so? Because again, it is a global practice. You know, I would urge all of you to look at, for example, Australia. Australia, all these standards are issued not by the government, but by their independent regulator. The regulator issues these standards as a rules, and also the quality standard, you know, the SQM and others as an auditing standard. So this is how the global practice is. Because, you know, sometimes there was a confusion, saying that, you know, if standards are not the rules, then whether, you know, it needs to be followed. And again, you mentioned that some of us fall prey to not reading through the standards, reading through the lines, but reading between the lines, right? I mean, you know, that is the kind of a thing, and then, you know, that is where we commit mistakes. So therefore, the global practice as well as the Companies Act will say that, you know, these standards are now the rules. So that is one part. Now what you mentioned about the exclusion of a public sector bank and branches. Personally, I would agree that, you know, the public sector branch audit concept, I would say that, you know, maybe, you know, because I am a newcomer in this field, you will know better. You know, it was at the time when this centralized operation system, you know, the banking, what is the term they call? Core banking system. And Infosys has its own system. Some banks run on the Oracle Financial. I don't know whether the Wipro also has a competing solution for core banking. So it is a core banking. So what is the relevance of, you know, the branch? I don't understand. You know, 2 years back, I applied for a car loan in one of the Union Bank of India, which is, you know, next to my NFRA office. So I thought that, you know, maybe the branch manager, so I requested that branch manager. He said, yes, sir, we will give you the car loan. So I applied. Then after maybe few weeks, I said, what happened to my loan application? Sir, we have sent it to our headquarters. I said, that looks something like, you know, small loan, car loan. I was not buying Mercedes or BMW, but I'm buying one of the Tata's car. And you can imagine how much a Tata car will cost, right? So, but what has happened is that the banking system, they have a core banking. Every small, you know, the loan application goes into the core banking. And then, you know, they actually, and for the loan appraisal also, it is done centrally. So that is the kind of a system is there. But I think few decades back, this system was not there. So that is why the branch audit thing came. But that is continuing. But supposing if as a regulator, if I say that branch auditors are not necessary, then it will create another controversy saying that, look, you know, what will the branch auditors do, right? So therefore, you know, I mean, this is another thing that, you know, we need to understand that. So what happened was that even SA 600, so we had a discussion with the RBI because, you know, as you know, in the presentation you may have seen, NFRA board is very unique. And it is, such board is not usually found anywhere else. In our board, we also have a RBI, SEBI as well as the CAG. I don't think there is any other regulator where, you, on their board, you have so many other regulators. So when we were having discussion on, the revised SA 600, so we asked RBI. RBI said that, look, RBI has two interests. One is the interest where, the banks are giving loan to the corporates, and whether, from that point of view, whether, their financial statement of corporates, they give a true and fair picture. So they said that yes, SA 600 should be there. But about this, they said that, they need some more time to decide. Right? They didn't say that don't do this. They say that, so far the branch auditors are concerned, particularly public sector banks, because they are following this system, so they also didn't want to, immediately shake the whole system. So they said, okay, let us do it phase-wise. So he said that, first you implement this, and then, meanwhile we will have a discussion with the public sector banks, Indian Bank Association, and then we will come to this. Same thing, when we were discussing with the CAG, all right, public sector also have, the old system of, auditing. And then we said, all right, in the sense that, because, in the NFRA board when we sit, we have to take everybody's views along, right? Because RBI, SEBI, and SEBI was ready for everyone. He said, done. So we had to find that, where is the meeting ground, right? And also, it would help us in having a phase-wise transition. So I would agree with you that, in case of a core banking system, whether how relevant is the branch auditing. But, I wouldn't say that, so clearly, because, tomorrow, how many branches are there? Total 140,000 branches are there, right? So, and then not that all branches are audited, but then at least in the entire system, 40, 50 branches must be being audited. Now, immediately the question will arise, what will happen to the branch auditors of those branches, right? So I think, those problems will be dealt by the RBI in the due course of time, but then, but it's a phase-wise implementation, yes.
Sir, yeah, we have questions.
Sir, as a member of audit profession, I would like to describe the relationship between NFRA and ICAI as that of Mahavishnu riding the small bird Garuda. And the 6-year-old child is asking the authority of 75 years old grandfather. Thank you.
Okay, the next question is from here, Pramod.
No, he said 6-year-old NFRA is taking on 70-year-old, 75-year-old institute, and Garuda versus Mahavishnu, is it Shiva? No, Shiva.
See, again, I would say that, as I said that, the term as a loggerhead or the or being taking on, these are actually, I don't see them in that picture, right? I always feel that as a democracy, we must express, each one should express the views, whether it is ICI or NFRA or even Karnataka the association. You can have a different views, right? The people here also can have a different view. We must discuss, and that is the beauty, because I always, why I'm so emotionally for any very vibrant discussion. Just, I will give you an example, that in case of an Aadhaar, the whole country was divided, every family was divided. And, we would not have been able to do this if we had not debated and discussed. And I also say that, we are argumentative Indian. We argue a lot, but finally, over the period of time, we come out with a good solution and which becomes acceptable to everyone. So in this case, supposing if we had not argued with the, amongst ourselves, then the matter wouldn't have gone to the Supreme Court. Finally, the Supreme Court gave its ruling. And then finally, it kind of gave some kind of assurance to everyone that Aadhaar is the good for the country. So I think, this kind of a discussion shouldn't be taking that, we are taking on the loggerhead and then, the two are fighting. I mean, this is a discussion, right? And that's a good thing.
Sir, this question of feedback is in individual capacity. One is that, of course, you were very open for discussion. I definitely thank you for this. And when we were discussion, I think this could be the voice of other professionals also, and my seniors are there to correct me if I quote any facts correctly. 20 years back, ICAI had this concept of non-undercutting. And this clause was removed by the instance of the government itself, saying that there shouldn't be such a clause. So, I mean, since you are open for discussion, I think it's a rather a humble submission that probably your recommendation to the government to reinstate, or when the ICI decides to put this in place, probably do recommend have a look into it again.
See, it is very difficult for me to comment on, because I am not aware of the facts, that what exactly the ICI, as according to you, 20 years back, came out with the provision, and what exactly the government did. But then the fact remains that undercutting has to be avoided. And for that, any reasonable solution. And again, I am of the firm view that if we try to do some reasonable thing, then I have never seen a government or any other body taking, a contrary stand, right? In the sense that, if there is an undercutting or something, if it is spoiling the image, the functioning of the profession, and then hurting the public interest, then in that particular case, something needs to be done, right? This is something which can always be done. So, in fact, I don't know, but I think some amount of that circular is still there. Please correct me if I am wrong. That auditing some minimum price. But then, why I am saying is that I am also DG of IICA, Indian Institute of Corporate Affairs. So we wanted to have, a statutory auditors, because there is a statutory auditor, so we want to appoint another statutory auditor. Because it is a government body, so we had to float an expression of interest. So we floated an expression of interest. Then the feedback that we got from one of the prospective bidders, saying that you must provide some floor, benchmark, and otherwise the people will undercut. So I asked Mr. Kulkarni, saying that this benchmark, he said yes, there are some ICI guidelines.
He was there at that time.
I said that then follow it. So we followed. I think something is already there. So I don't think that has been withdrawn.
It's only a recommended scale of fees. It's never followed in practice. It's only recommended.
So again, but now the question is, if it is recommended and if you are not following, right? So then what do we do then? That is right.
Undercutting code of ethics, you're saying. Yeah.
Good afternoon, sir. Myself, Nirmal. Follow up to the question raised by my fellow colleague from there. So there are almost 329 big firms in India, and as per some news report, 94% of corporate audit is done by some big four firms, which I don't know why Institute has not, it should be a red flag for Institute with regard to the quality of work, because as you said, there need to be some specialization. Even some specialists, like surgeon, he can't perform so many surgeries than the limit prescribed or what he can do. But all these big corporate audits done by these bigger firms, that is 329 firms put together, bigger numbers. Rest partnership firms, around 27 partnership firms are there as per the data of the firm, institute. So why there should not be a cap on bigger audits, statutory audits, when a director of a company, when a director is capped with some numbers, and even small auditors are placed a cap of 60 tax audit by institute. Why institute is not taking the other way around for bigger audits? Thank you.
Many of these questions you should be asking the institute.
Institute, so we will take it, we'll pass this question on.
It is like this.
Why NFRA can't place a cap for bigger audits?
Sir, we will take this question with the institute when president is there. We'll move on to the next question, sir.
Good afternoon, sir. Excellent session.
By the
Thanks
way,
a
this
lot.
is the last question. Sorry, sir.
Yeah, it's been a very open talk by you, as you mentioned, and thanks to the organizers and panelists and everyone. So, first, just to give a bit of very brief background, you spoke of Aadhaar, and we all know about how the digital economy is growing and everything else on one hand, and also the core banking, what you said, where everything is computerized. On the other hand, in some of the orders of NFRA, there's also been notings about backdated documentation. In this context, there's been some news reports, some buzz around having a DigiLocker kind of a platform and a digital infrastructure in which auditors document their work papers, standardize it, etc. What are your views on this? Is anything happening, and is there any timeline for such a thing to?
No, in fact, this
Thanks.
is this is a very good question, because this audit documentation, there are standards which says that it has to be archived within a certain period, and then after that, usually there should be no change, right? But what we have seen, there is a clear-cut evidence, and not only in India. I mean, I was going through some of the orders of the PCOB, where they have actually passed some orders against one of the Indian firms, that they had inserted a blank paper so that tomorrow they can they put any other analysis there. So this problem is there. So again, going by my Aadhaar experience, I suggested to the government saying that why shouldn't we have an entity-based locker, right? Just like the DigiLocker. So each one of us, 140 crore people, we have a DigiLocker, we have a digital signature, we have that. So when we can provide a DigiLocker to 140 crore people, how many entities are there? The total number of companies registered are about maybe 23, 24 lakhs. Active company will be there. How many auditors are there? So as a larger question, we said that, look, and every entity is identifiable. They have a unique PAN number, right? So let us say if there is an entity-based locker, whether it is a firm, audit firm, or whether it is a company, and many of the documentations, they can be stored there, so that if there are any change, that will get immediately flagged, saying that, this was changed at such and such time. So this is a very standard way, innovative way, and you'll be very glad that, our finance minister, in the budget speech of last year, she had mentioned this, saying that there will be now entity-based locker. The Ministry of IT, which has implemented this DigiLocker, is already working on that. And so, as and when that comes up, then definitely it will have a component for the audit firms, so that you do your audit, and then within, let us say, 60 days or whatever time, you have to archive. So once you archive, you put in there. And then, if any authority or ICAI or NFRA or anyone else wants to access your audit work papers, you have to only give the link, saying that, these are there, so that tomorrow, there is no question, no doubt about saying that, this audit paper was inserted and so and so. So that will again be a unique solution, and this can happen only in a country like ours. Why? Because, we have underlying Aadhaar infrastructure. Because, if there is an entity locker, somebody will have to sign this. Then, because everyone has Aadhaar, they can use the Aadhaar-based signature to, every engagement partner, for example. I mean, the documentation has to be done by the firm, so somebody who is responsible for that particular documentation, he can ensure that, these things are put in there. So this is a work in progress, and I hope that Ministry of IT will be able to come out soon, because an announcement to this effect was already made by our Honorable Finance Minister in the last year's budget.
Thank you all. No, we would like to have many questions, but we will end the question and answer. No, you can always ask the questions in the offline say. Thank you, sir. You can ask the questions in the lunchtime. Thank you. May now request CA Rahul Gandhi. he insists me not to say full name, but I still said it. To come and hand over a memento to CA Mohan R. Lavi. May now request CA Nagarjan, Executive Committee of KSCA, to present a memento to CA Ravi Anantaramaya. May I now request CA Vishrant, Executive Committee member of KSCA, to present a memento to CA Sham Ramadhyani.
accepted the invitation to grace the occasion and address the members. I would like to thank all the attendees for having gathered in large numbers to have made this meeting a great success. Thank you.
Members, thank you for joining the.